Welcome in, folks. Enough of that. Let's get on with the video. It's been a hell of a Monday. Not so bad, eh? Not so bad of a Monday. Definitely have had worse Mondays than the one we've had today. Market looking pretty dang good. Market looking pretty dang good, man. Google up. Look at this. Look at this. Isn't it nice to see everyone getting along? Isn't it nice to see everyone getting along? We got the semis up. We got the hyperscalers up. Yeah, you know, Apple's kind of getting its ass whipped right now, but we're just gonna pretend like that's not going on. Okay. All right, we're gonna pretend like that's not happening. Don't mind TX in here, okay? Outside of that, isn't it nice to just see everyone getting along? Feel like we can all win today. Oracle up 9%, Microsoft up 5%, Palantir up 2.2%. The headliner of the day, Palantir, gonna get into them in a little bit here. ServiceNow giving us a 4% gainer on the day. Dell up 6%. SanDisk up 6%. AMD, Google, Meta, Amazon, Tesla. Wow. What a day. What a day. Change the title of the video. There we go. All right, let's do this actually. Look at everybody in here. I'm glad I didn't show Microsoft. Yes, same. Yes. Cowboys, Natang, Wayne Jones in the building. Frag Bag in the building. Gemini Rising. Cheesecake Factory looking better than S&P lately. I love to see it. SanDisk for the win. Barbarian Killer. Crazy name. Charles Sandoval in the building. 6 Shades. My boy Jacob. Good to see you all in here. Look at the boy. Happy to see you, folks. We got an absolutely strong day today. We got the market up, rallying a good bit. My portfolio is looking not so dang on shabby. Public portfolio currently sitting up $934 in the hyperscaler, the new position. So we've deployed $5,400 or $5,000, $4,000. So we put for $4,500 into the hyperscaler position, and yeah, it's up $900, 20% return in approximately 10 days. Not too dang on bad. Public portfolio up $90,000 all time, pushing that 90K mark. Never hit 100,000. Haven't hit $100,000 in this portfolio yet. On the month, we're now back into positive, up $3,800. Up last 3 months, up about $26,000. Year to date, up $43,000, coming off the back of a $7,750 day, being led up by the S&P 500 and some of our individual positions. SoFi giving us an absolutely beautiful rally, up 10% today. That purchase that we did on SoFi at $15.20 is aging like wine. Feels damn good. Feels damn good to go against the grain, you know? I think a lot of you who are in here, who are watching the stream, DH Wisdom, always love to see you. A lot of you who are in here who are watching the stream, maybe not all of you, but yeah, maybe not a lot of you, but there's definitely a good bit of you who are in the stream right now. We're a part of the last few weeks with me. You know, you've been on the live streams with me. You've been in the videos with me, and many of you went against the grain. Whether it was last week when SoFi crashed after its earnings, whether it was getting into the hyperscalers because everyone hated them just 2 weeks ago. Many of you now have had the opportunity to go through a dump and are now seeing a bit of a pullback off that dump. And let me ask you something. Does it not feel so good when you go against the grain, you put your money in the market when everyone else is running from it, and it works? Doesn't it feel so damn good? Even if it doesn't last. And look, we got to understand, this is the stock market, baby. These sorts of green days don't last forever. But doesn't it just feel good when it works? Don't it feel good? Don't it feel good when you do $1,000 SoFi buy at $15.20, and now that purchase on SoFi from $15.20 is now up, dude, 18% in a few days? Doesn't it just feel damn good? She should be. Congratulations, everyone. For those of you who went against the grain, for those of you who said, I don't care that the market's in fear, I'm going to buy because that's what my rules and my principles say, congratulations. Don't get too caught up in it. It's probably not going to last, right? And these things don't last forever, folks. Okay, and we still got some room to go from here. There's still some ground we need to cover, but enjoy the moment. It feels good. It feels damn good. You know, whenever I was investing into the stock market alone, when it was just me, I wasn't making YouTube videos about it. I was just doing my thing. It was a lot easier to have my conviction. This is something that's interesting. It was a lot easier to have conviction in my positions. When I bought a stock because it was down, it was easy for me to believe in it. Once I started making YouTube videos and putting all of my moves in front of the eyes of thousands of people, it brought a little bit more, I questioned myself a little bit more. And just in the sense that it makes me have to be more dialed in. And I have to go, am I certain about this? Am I sure about this? And it makes me run through those questions. And so it's nice. It feels good that when, a purchase on SoFi goes up 20% or open up the new hyperscaler trade and it's up 20%, just like that. It feels good. It feels really good. And I love being able to spend these moments with you all because, again, I'm not trying to talk crap and talk down on any other creators, but I just have to say facts. Factually, when creators say, I'm buying this stock, but they don't show it, I'm opening this trade, but they don't show it, I don't believe them. And I don't feel like I can align with people like that. So now that I'm a creator in the stock world, I guess, if you call 15,000 subscribers a creator guy, influencer, that's why I do it different. And I go in and I do it. And I put myself on the line. Because, look, I'll be honest with you. When I started the hyperscaler portfolio 2 weeks ago, I got dragged. I got dragged through the mud in the comment section. And I don't care. I mean, I've been doing this long enough. I don't care. But the reality is, man, when I made that, people were like, Tyler, are you dumb? Semis are obviously the play. Bro has a $500,000 public portfolio but doesn't understand the basics of stock investing. That was a funny one. I have that one screenshotted. And I'm not the type of guy who's just going to be an asshole and try to rub it in people's faces. Again, you never know what situation people are going through, but ooh, does it feel good? Does it feel good to see the market move and how it's moving? Does it feel good to have bought Microsoft at, I don't know the number, $384. And now it's at $489 just a week later. It feels good. And it's so fun that we are all on the same team. Look at this. Look at W. Jacob. Shout out to y'all, man. Let's get into it then. We got a big one coming up here in about 19 minutes. We have Palantir releasing their earnings. I think this is going to be very important. I don't think it's maybe going to move the entire AI trade. It's not going to be as big as an Amazon. It's not going to be as big as a Microsoft, but it is important to pay attention to if you're in the AI trade. Listen, if you're invested into any of the names that I'm about to say in a second here, you should pay attention to this. Micron, SanDisk, NVIDIA, Marvell, Dell, CRM, ServiceNow, Snow, Oracle, Palantir, obviously, ACOM. If you're in any of those or interested in any of those, I don't know if I said AMD, but I meant to AMD. If you're in any of those, Palantir earnings is going to be important. Let me explain why before we actually get into the numbers. I want to break down the funnel of things, right? Let's go backwards. Yeah. AMD, let's go very far backwards. Screw it. ASML sells machines to create chips. Those machines get purchased by chip manufacturers who then manufacture the chips for, of course, companies like NVIDIA, AMD, Micron, etc. Micron goes and sells those chips and that hardware that they're designing and creating to hyperscalers who are building data centers who need all of that to create the data center. That includes companies like Google, Microsoft, Amazon, a little bit of Meta, okay? And other ones, but these are the big ones. Companies like them, Microsoft, Amazon, Meta, etc., build these data centers using the hardware that they purchase from these chip manufacturers and designers, creators, etc. And I don't know if I said this, but they used all those chips and stuff to build these big data centers. Now, they don't just make them just to have them. No, they make them to rent out the space in those data centers to companies who run software. So they're the hardware. They're providing the hardware for the software to run. This software can include many different things, such as LLMs, open source models. You're thinking Anthropic, OpenAI, or ChatGPT, Claude, etc. Right? They're running all of this software on that hardware. Another form of this software are companies like Palantir. And although it's not really like an open source LLM sort of thing, it's not like a chat GPT. It's not that. It is still software that is powered by and running using AI, right? And so companies like these have to go and run their software on the servers and using the compute from these data centers. What they then do is they take that software and they go sell that software and sell their services, their AI software services, to governments, companies, etc. So it's important that you pay attention to what's happening to software companies, because if they're doing bad, it sends big old ripples throughout the entire chain. Think about it like this. Let's imagine that all of these software companies stop making money. Let's just imagine. Claude or Anthropic, OpenAI, ServiceNow, Palantir. You can even go as far as to start talking about like Oracle, Salesforce, etc. Right? But these software companies stop making money. They can't afford what they're doing, so they stop spending money. So they stop making money, so they stop spending money. Them stopping spending money, of course, means that the people that they're purchasing this computational power from, the data centers or the hyperscalers, means that they now stop making money. Now we're talking about Amazon. Now we're talking about Google. Now we're talking about Microsoft. They're no longer making money because their customers don't need the things that they built. Or in other words, a lot of the money that they just spent to build out all of this AI infrastructure, these data centers and all of these things, it was kind of a bit for a waste. They invested into these data centers and now they don't have customers. And sure, they'll use it. Amazon will use it for its own stuff. Microsoft can use it for its own stuff. Meta will use it for its own stuff. But that's not the point. The point of these, for the big three at least, was to rent it out to these major companies. That then means that they don't need to keep building more data centers because there's no demand for the ones that they have. Meaning that they stop spending money with AMD. They stop spending money with NVIDIA. They stop spending money with Micron, SanDisk, SK Hynix, etc. They don't need all these pieces. They don't need these components. Which then means that those companies stop producing as much. There's not as much demand. They don't need as much. So the chip manufacturers are no longer producing as many chips. And if they're not producing as many chips, they don't need as many machines. So then an ASML doesn't need to sell any machines. Do you get the point? If the front end breaks, the whole shit breaks. Okay? And listen, it's not like if Palantir starts doing bad, they're all screwed. It's just that they are connected. They are all connected. And people tend to take sides in this, right? People will, I'm an AI software investor. I'm a hardware AI investor. I'm a, right? They kind of pick what it is that they choose. But the reality is that all of this is intra and interconnected. All of it. If one big piece breaks, in some way, all of them break. And so rather than being narrow-sighted and saying, well, I don't care about software. Oh, you absolutely should. I don't even care if you're only invested in a Micron. You absolutely need to pay attention to what happens on the software front or what happens on the foundry front or the hyperscaler front, because they all touch. And you pull a chain out of this bad boy, a link out of this chain, things start to break. So naturally, it's important to pay attention to the big ones. And Palantir is one of the big ones. Okay? Palantir is one of the big ones. So Palantir is an AI software company, and it takes an organization's messy, scattered data and fuses it onto one clear picture that lets AI act on it. Their platform, AIP, is the layer that puts AI to work on a company's real operations. Now, they have two major customers that they provide this service for. Governments, especially the United States governments, military, intelligence, etc., and commercial. These are major enterprises, fast-growing, companies. This could also include things like hospitals, things that have a bunch of data, a bunch of unorganized mess. Okay. Now, importantly, I want you to understand they don't build models. This is not an open AI. This is not what Anthropic does. That is not what they do. They make any model actually usable on your business. Okay. So you can take a Claude, you can take a ChatGPT, whatever, use it as the base model and apply AIP to your company to connect all of your data to then get an understanding of what's going on. So, like, let's say, imagine you're a hospital. You got a bunch of patients. You got a bunch of staff. You got a bunch of this and a bunch of that. I don't know what happens in hospitals. People get hurt, they get fixed, they die, they don't. I don't know. But you got all this stuff. Palantir can go in and use any baseline model, realistically, to apply their software to help you organize all of that data so that the person at the top of the chain can look and say, okay, how can I improve my healthcare efficiency? And then it'll pull through all this data and give you recommendations, right? So it's for these big companies that have a bunch of shit going on, okay? That's what Palantir does. Now, whenever it comes to the scale at which they're doing this, they do it at a big scale. Palantir is expected on this earnings report, which releases in 11 minutes, to do $1.81 billion worth of revenue, which will be a step up year over year of 81%, which would provide them an EPS of roughly 34 cents. And it's not like Palantir is new to this. No. They've been doing this for a minute. If we just go look at their revenue throughout history, I mean, it is rather consistently. They have been making money for a while. You go back to 2018, they were doing $595 million worth of revenue. Take that into 2025, they were at $4.48 billion worth of revenue. You look at their free cash flow flipped positive back in 2020 and 2021, and they went profitable in 2023. So this is no small business. This is a big business, and they make a very big impact, and they're very important. Okay, they're very, very important to the world of AI. And so when they release their earnings report, it is going to be very important to see how this goes. Do they hit their numbers or do they not? Now, I want to make one thing clear. Before we kind of get into this next part, I want to make one thing clear. When I say it's important to see if they hit these numbers or not, do they hit 1.81 billion? Do they hit 81% revenue growth year over year? Do they hit 34 EPS? I'm not saying important for the stock price, because I think we've all come to the understanding now this market is irrational. You can have a horrible earnings and the price doesn't do. I mean, think about how bad Meta's earnings were, and the fact that its price outperformed Google within the first 5 days is just crazy, right? So I'm not saying that it's important for their price. Price, especially in the short term, is so volatile, there's almost no point in caring too much about it. I'm talking about more for the long-term vision of the AI trade. And realistically, the last time that Palantir reported earnings, they dropped 14%. So I'm not specifically talking about, again, the stock price. I care more about what does their company say? How do things continue to progress from a Palantir perspective in terms of the software that they're offering, the services they're providing, and the customers that they bring in? Because that'll give us a clear understanding of if people still are using the software that is fueling the AI trade. Because software does fuel the AI trade. It absolutely does. And that's important. Now, when it comes to Palantir specifically, one thing that I am really looking into is the commercial side of things. So you remember how I told you earlier today or earlier in this live stream that they do two things, right? They have governments and they have like enterprises and a more commercial side. Well, for the vast majority of the time that Palantir has been making a lot of money, it's mostly come from governments. They have huge contracts with the government. But as of recently, they started to dive a bit more into the world of commercial and trying to work with some of these larger enterprises and things of that nature. Matter of fact, if you look at it, U.S. commercial revenue is expected to be around $716 million, which is an increase of 134%. So what they're doing is that Palantir is trying to prove that it's more than a government contractor. They are someone who can provide these services to major companies, franchises, corporations, and governments as well. And I think that if they're capable of diving into the world of commercial a bit deeper, it opens up a new doorway for software companies, right? It opens up a whole nother layer for software companies here in the world of AI and a new customer base, right? There's a new consumer base. There's more revenue coming in from multiple different angles, which is great for a company who is still, I mean, this size, one, but two, a part of the AI trade. The AI trade is still new in some capacity, and we want to see the limits that it can keep breaking up to. So it's very important that we see not only do they hit revenue, do they hit EPS, maybe what are their margins? I'll talk about that later, but also, in addition to that, what about the commercial side? How is their commercial data looking? It's going to be very important. Now, in addition to that, another thing that'll be very important is their guidance. So they're going to come out and they're going to guide. And for a company that's priced as high as they are, guidance is very important. I mean, I want you to understand, Palantir is one of the most expensive companies in the stock market in terms of price valuation multiple. I don't remember what the number is, but their price to sales is crazy. It's a big multiple, and it's still high from where it was. It was like by far one of the most expensive in the stock market. It's come down a good bit, and it still is. right? And so for a company that's priced so high already, guidance is so important. And so, in addition to what we see in terms of earnings, we also need to pay attention to guidance. Now, Palantir already raised full year guidance to 71% growth last quarter. Analysts want to see them raise guidance past 75% because a raise signals that management sees the momentum accelerating, and that can re rate the stock higher. A simple reaffirm leaves the valuation debate unsettled, and that could be something that continues to push Palantir's price towards the downside and brings a little bit of uncertainty to the market, especially in the AI trade. So when we look at guidance, not only, again, when we look at the earnings report, not only are we going to look at revenue, EPS, and what happens from a commercial perspective, but we're also going to dive into what do they say about guidance? What do they think the rest of the year is going to look like? That's going to be very, very important because the truth is, folks, at the end of the day, Palantir is priced for perfection. They are priced for perfection. Like I mentioned before, even after falling 40% from its all-time high to around $123, they still trade. It was 41 times. I knew I had it in my notes somewhere. They trade near 41 times sales, which is an enormous multiple at a $316 billion market cap. Again, it's one of the most expensive stocks in the entire market. And so there's a lot of tension behind this right now. What is the commercial side saying? What is guidance saying? What is sort of impact does that have on their revenue? Are their margins holding up well? Because again, this is one of the more important and major software companies in the world. And so this is going to be a very, very, very important earnings report to pay attention to. And I think the market knows it. I think the market knows it because you are seeing that kind of like wavering a little bit as we're getting closer and closer to it. Where we saw some stocks really rallying throughout the day, as we're getting closer and closer to this earnings report, you're seeing things chop a little bit. You know, look at just a random example. Look at what happened with SK Hynix. Things were, we were looking real good earlier today. Is this SK? No, this is SanDisk. I was about to say. Things were free willy-nilly having fun. But then about over the last 90 minutes, as we're walking up to this earnings, you're seeing that price kind of stabilize a bit. Same thing goes with an SK Hynix. Same thing goes, with a bit of a Micron, just stabilizing, slowing down a bit. Even NVIDIA is pulling back right now going into this. Now, it's not to say it is for sure because of Palantir earnings, but I do think the market is positioning, knowing how important this is and what it could say about the future for AI. And they also know that we have more coming. There's AMD tomorrow. There's SanDisk on Wednesday. So this is just like the first phase of a three-phased earnings report week for the world of AI that I think is going to be very impactful. And so going to be very important. What I'm hoping is that this comes in really strong and it just reaffirms everyone's beliefs. Everyone who's starting to believe that the world of AI is back and that the AI trade is back, I'm hoping that today's earnings, tomorrow's earnings, and Wednesday's earnings reaffirm that. Because if so, I think you're going to see multiple stocks go for all-time highs. Like I think Microsoft very reasonably can try for an all-time high if that is the case. It has a little bit of work to do, right? We still got the golden zone sitting directly above us. And like I said in today's video, Microsoft is running real hot right now. So it's not going to be easy, but euphoria is euphoria. And when you start to see people get real euphoric and believe in we're back to their bones, you can't see these sorts of all-time highs happening. Look at Amazon. Look at what Amazon is doing. And so it's going to be really, really interesting to see if people believe that we're back, what stocks really benefit from it. One that I'm watching super closely that I can't help but look at right now is Micron. Right? I can't help but look at Micron when it's sitting here currently and it's in the bottom side or, it's in this descending structure that has been trapped in for a while. And it seems to be trying to figure out some sort of bottom. And it just came back down, as you can see, and bounced off that golden zone support. It's bouncing off of support. It's heading back up towards the top side. Seemingly, it's hard for me to not pay attention to Micron and go, maybe there's a swing trade option here. Maybe there's a world where an entry here makes sense, I'm really paying attention to these because you could see that reversal coming soon. Even an AMD coming back up and clearing that red zone is very possible if these earnings reports go well, especially the one tomorrow, AMD. So this is going to be big. And again, it drops in 3 minutes. We're just 3 minutes away from finding out how this thing goes and what happens. And then I believe afterwards, around 4:30, we are going to see the earnings call. Let's see. It is going to take place at 4 p.m. So we're going to see their earnings call in 1 hour from now. So the game plan is we are going to see what Palantir's earnings says. Then we're going to do some post-market close analysis. We're going to go through all of them and just do a quick bit of analysis. Then we're going to get ready for the earnings call, which is going to be at 4 o'clock. We're going to listen to that. I'm going to give you my thoughts, kind of what I think, prep you a little bit for tomorrow as we have AMD's earnings, which will be very important. And then, I think we'll wrap it up from there. That'll probably put us somewhere around 3 hours or so. Hour and a half. Yeah, about 3 hours or so. So we got a good bit to get into today. All right, folks. And we are just approximately 2 minutes away from Palantir earnings. So let's go ahead. Yo, Tyler, I bought the TH School toolkit, but I don't have access to the Discord. Yeah, that could be because of a couple different reasons. Shoot me an email. My email's in the email. Remind me, and I'll have the team look into how, because it's the same Discord. It's the same Discord as TH Capital. Because of the situation where your account, all that, we'll try to figure it out. The reason why they keep dumping is people are expecting there to be a massive hangover after all the capex. I tend to believe we are going to see productivity increase. We're just at the beginning. I could see that over a long time frame as well. Capex, even though it's pretty rational, companies need to increase spending. The market really doesn't care. Let's see. Let's see. Till when is the discount? I'm shutting off the discount for the TH Toolkit on Wednesday. So it's going to be live tomorrow, and then I'm closing it. Yo, Tyler, what are your thoughts on SpaceX in view of the earnings reports tomorrow and lockup expiration? I'm not interested at all, to be honest. I wasn't interested when it first launched because I thought it was overvalued, and I still think it's overvalued. So it's just like, I hope it goes up because I do know many people who own some, but I am just very, very, very uninterested in SpaceX and at least adding it to my portfolio. And I don't even think the market cares about it anymore. Stocks right now. Can Amazon go higher? Yeah. Yeah. I mean, it can, right? But I made a video about it earlier. Every step that it takes upwards right now is getting more and more risky. But all right, folks, we are now. Can I use it? Yeah, of course. Of course. Yeah, the toolkit's for TradingView. It's accessible to TradingView. So anyone with a TradingView account can use the toolkit. All right. Bad Boy should be coming out pretty soon here in a second. We're going to dive into it when it does. Let's see. Nothing yet. Yes, it is a toolkit for is TH Capital. No, so the toolkit itself, just the toolkit, is a plugin for TradingView. Yes. All right. Results should be dropping in the next few minutes here. Got a little Zevia action. Trying to get a little Zevia sponsor. Latest. I think they are about to release. I'm just updating the SEC website. Ooh. Nothing yet. Let's see here. Nothing yet. What is its price doing right now? Let's see. Palantir. Why did my chart break like that? Yuck. How is Palantir responding right now? Price is wiggling around a little bit right now, but nothing crazy. Still waiting on those earnings to drop. Do 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 do. I feel like they're usually around like 05, the 05 mark or so. Harley Davidson. So just reminding you what numbers we're looking for. We are looking at $34. $34 would be wild. 34 cents EPS, $1.81 billion in revenue, which puts them right around 81% year-over-year growth. In terms of the actual earnings report, I think anything over 1.85 is very, very bullish, and I think that's more of an acceleration that the market's looking for. I honestly think 1.81 billion or somehow lower would not be super good. I don't really think the market will like that. So I think at least, even 1.9 or something like that would be great, but time will tell. Time will tell. Let's see. Price is being a little jittery right now. Seems the market's trying to position still. Got a little bump up there, but that was literally just on market closing. That wasn't on any news right now. Got a little jitter coming in here from Palantir. We might have something. Let's see. Nope. Twitter's so fun. Like, I remember the days where Twitter was like the only place where you could get like the fastest information. Look at these fellas. Been trying to get in contact with future investing. I'd like to chat with them. I think it'd be pretty cool to do some collabs. Check it out. Palantir share started to get out. All right, cool. Palantir just reported earnings. Holy shit. Okay. Ooh-wee. Ooh-wee. That is a big beat. Okay. All right. Fucking relax. Relax a second. God damn. Okay. Yo, my word. All right. Gotta change the title. Yo, jeez. What is this? What is this run bottom to top? 7.6% run. There's a 12% move priced in terms of options. So you could see this continue to rally or run a little bit crazier. Wow. Yo, how many times are we going to watch some crazy earnings release live on stream? Jeez, dude. It's not updated yet. I'm going to try to get the full file real quick. Wow. Q2 2026 earnings. Damn, dude. That is a crazy beat, dude. What did I say? 1.9 billion the market would really like? What percentage is that? What percentage would that be in terms of growth? Wowza, dude. Look at this. Raises 4-year 8.15 up from 7. That's a big raise as well. We'll get data on commercial in a second here. God, bro. What a wild beat. Okay, so Palantir Q2 earnings, adjusted EPS at 41 cents, estimates were at 35 cents, revenue at $1.94, estimates at 1.81. I think did we have 35? 34, we had 34, same thing. Adjusted EBITDA at 1.20 billion, beat by 110 million. US commercial revenue at 764 million, estimates at 716. What were we looking for? Yep. Okay. Sees Q3 revenue, Q3 revenue at 2.16 billion. Estimates were at 2 billion, so up 160 million there. Fiscal year revenue, God, that's a big jump. Adjusted operating profit, 4.89 billion, 4.90. Estimates of 4.5. Fiscal year U.S. commercial revenue above $3.42 billion. Wow. That is a crazy read. How is the price responding to that? There was a 12% move priced in. 9% so far. Still has more room to get a little wild. Yowza. How did it respond right after its last earnings report? Goddamn. So I mean it kind of rallied and immediately dumped. Time before that, we got a beautiful rally. Actually, a great rally for a few days before eventually dumping off there. Time before that, because I know it usually sells off. I just wonder if it usually goes vertical like this first. It almost always goes vertical and then immediately sells it off. Do we see it again? Let's see. I want to run a quick poll. I'm going to run a quick poll. I'm curious what you guys think. Let's see. Vote on that. Wow, man. So when it comes to Palantir, I definitely would be a little careful here. I wouldn't be chasing this down for any reason, especially knowing that there is kind of like that macro / micro resistance sitting above us. I guess if you wanted to go ahead and apply trend there, it's a bit of a weird move. There for sure, but also it didn't respect this trend whatsoever. So I guess you have to include it. Fibonacci golden zone sitting directly above this as well. I mean, this is going to be hell for Palantir to try to break through realistically. I mean, you got to look at what Palantir has in front of it. I mean, it has this red zone of resistance. Of course, you've been rejected off of this throughout the entire last, 60 to 90 days. You have golden zone resistance between 149 and 139 directly above it, and downward sloping resistance, which is currently sitting around $149. I mean, every step of the way for Palantir from this point forward is going to be difficult. But if it can succeed here, I mean, the breakout that you could see from Palantir could reasonably take it up to, if we were going to say full extend off of this, I mean, you could be looking at a Palantir sitting at $172 under the right circumstances here. Wow. That is a crazy report, honestly. I thought like 1.85, 1.86. I thought that was a reasonable guess, beat it by 50, 60 million. I honestly was not expecting them to come in and smash it by $130 million. I was like 50%. Because I think that's what we said, right? 1.85, 1.86 billion. I think the market would be happy with it. 1.94. I mean, that thing nearly pushed $2 billion in quarterly revenue. Wow. What a jump. I really love to see what we're seeing from commercial. So analysts were expecting that commercial revenue from Palantir was going to be 716 million, which is a 134% increase. It actually jumped in at 764 million, which is a 149% increase year over year. This is great for the market, dude. This is good for AI stocks. This is just the sort of thing you want to see. In a moment right now where people are starting to become confident again in AI and maybe believing that the AI trade is going to work, you want to see massive companies like Palantir succeeding. You want to see them winning because it's that sort of fuel that the market needs to continue forward. The market wants to know that these, Google and Amazon and Microsoft are building these data centers for customers who are actually generating an accelerating amount of revenue. And when you have a Palantir coming in and pulling in, beating analyst expectations by 15, 20% on commercial increase, beating analyst expectations on revenue by a lot. I mean, it was what, 81%? Was that the number we were looking at? 81%, was it? Yeah, 81% revenue growth year over year was expected, coming in at 93%. We're talking about a company that's nearly pushing 100% year over year growth still. And again, this is no new company. It's not like Palantir is new to this. They've been doing this. So many of these AI companies and these sorts of things have just started to come around. No, they've been here. They've been around and they're still growing. They're still scaling. And the fact that they're looking at total fiscal year revenue, what was that number? Fiscal year revenue guide at let's call it $8.15 billion. Dude. I mean, we're talking about a company that would, be climbing from 4.4 billion to 8.1 billion from 2025 going into 2026. Net income climbing as well. User count still growing, obviously, especially from a consumer perspective. I mean, this is only getting better. Does it justify this big PE ratio? I don't know about that, right? Like, can I personally rationalize buying a company that's PE ratio is 131? Not really. I mean, their price to sales was what, 41? Is that what we were looking at? 41, was it? Yeah, 41 times sales. They trade 41 times sales right now, which is an enormous multiple. We're talking about one of, if not the most expensive stock in the market right now. So does that justify a purchase for me? No, not really. Price of sales right now is 55, by the way. Like, no, but I do love to see it. I do love to see them doing this well. And I do love to see them holding up. You want to see these software companies doing good, especially as someone who just bought and just opened up a $5,000 trade on hyperscalers. Yeah, I want to see them I need to see their sorts of customers, the people within their customer brackets doing well. I want to see their customers doing well. I want to see them making money because that money finds its way into the hyperscalers pockets, which ultimately does sometimes find its way into the semi pockets as well. It finds its way into NVIDIA's pockets, AMD's pockets. And that's why they tend to perform well under these moments. Let's look at 1 hour performance. Yuck. Can't see it, but this is great. I mean, this was a great earnings call, dude, or earnings report. And I'd be very curious to see what they say, how they've scaled their commercial side so much. Because, a lot of people have said recently, like, oh, Palantir's falling off, Palantir's dying. They're what's it called? They're losing a bunch of contracts all over the place, which is kind of false information. Realistically, they rejected one major contract because in theory, the contract they already have signed could cover that as well. So it's more of just like mechanically preserving your contract efficiency. So I wouldn't sit here and say like they're losing a bunch of contracts. And so I'd be very curious to see how they manage to push up commercial so much. Alex Karp, dude. CEO Alex Karp calls domestic commercial and sovereign AI demand otherworldly, absolutely monster print for the software giant. That's nuts. I guess we can pull up the actual report now. Wow, man. Let's download this bad boy. Wow, bro. Let me try to get this pulled up for you. I have it on 1.9. Yes. Okay. That should pull up, right? Yeah, cool. Income from operations, 912 million. Adjusted income from operations, 1.19 billion. Cash from operations, 1.2 billion. 63% margin is just so wild. I mean, it makes sense, right? But still, for a software company, I think that's still strong. Raising a revenue guidance to 8.1 billion. Adjusted income operations, 4.8 to 4.9. Adjusted free cash flow guidance to 4.5 to 4.7. And that just goes to show, like, this is also great for hyperscalers as well, because this is the sort of company that is not only making a bunch of money, but their margins are so good that they're pocketing a ton of free cash flow, which opens them up to continue operations even if times do get a little bit rough. And it starts to stabilize the volatility of this quote unquote AI bubble that we're in right now. I want to read this actually. I want to read this. How long is this? I'm not reading all of this, but let's. It's not that bad, actually. I'm curious. A global movement is emerging. The revolution for independence and AI sovereignty is now well underway. Every organization in the world is awakening to the risks of handling the creators of the language models, handing the creators of the language models the keys to their institutions, letting these models loose within their homes. The demand from our partners is clear. It is for control over data, the prompts that the models ingest, and more fundamentally, the organizational and business intelligence, their alpha, that the language labs are not only ready and willing, but structurally designed to capture from their customers. It's beautiful, dude. Our business is compounding at a rate and scale that we have never before witnessed. We have generated $1.9 billion in revenue for the second quarter of the year, another record in our company's 2 decades of operations, reflecting a 93% growth rate over the same period the year before. Our entire business nearly doubled in the span of 12 months. And this is what I'm talking about. Like, yes, forward outlook is extremely important. Yes, what does next year look like? What does the year after that look like? Yes, all these things are very important. But when you have 2 weeks back to back where Amazon is saying that their cloud business is booming like never before, Microsoft saying that their cloud business is scaling like never before, margins are consistently improving, then continue down the chain a little bit. You have software companies like Palantir coming out and saying that, listen, our business is compounding at a rate and scale that we've never before witnessed. How can people go and say that it's dying? That it's going to die in the future? Yeah, sure. I can see that. I can see that logic. That it's going to slow down and decelerate in the future, 100%. I can see that. But the idea that AI, software, hyperscalers, hardware, EUV lithography is dying is crazy. That's crazy logic. I feel like that's being perpetrated by people who missed the boat. Wow. And continues on to say, and our record revenue has been accompanied by yet another record in quarterly profits. They generated $1.1 billion in profit in the second quarter of the year, an astonishing level of proceeds that for many on the outside and even to some internally would have been unthinkable only a few years ago. Only a few years, more like 2 years ago. Put simply, we have now generated more profit in a single quarter alone than we did in total revenue in the same period the year before. And the core of our business in the United States continues to expand at an unrelenting and breakneck pace. That is one of the funniest terms that people say, by the way. We generated a record of $1.6 billion in revenue for the second quarter in the United States, representing a 115% increase over the same period last year. Generated a record of this is what I'm interested in, $764 million in U.S. commercial revenue this quarter, which is a 149% year-over-year increase. Such an achievement would be cause for astonishment in any business. For one of our size, scale, and consequence is simply staggering. On a quarter-by-quarter basis, our U.S. commercial business grew 28%. Such growth, indeed, such acceleration, gives the impression that what others might require a year or even longer to achieve, we can do in 90 days. That's so tough. Entering into a parasitic relationship with our partners. It is true that our approach has diverged sharply from the market in this regard, and yet we are one of the few companies in the tech industry that is fully aligned with its customers. Alex Karp. Yo, this earnings call is about to be so fire, dude. Wow, man. How are we responding? Let's see. It's maintaining decently well right now, pushing up into that resistance. It is going to start to get a little bit difficult for this to continue upwards. I think it's about to run into a major zone of resistance, and that's going to give it some problems. Toolkit, let's see. Toolkit's giving you a plus 4.46 on the lower time frames, 5 minutes. On the 1 minute, I would assume is diverging already. It is diverging and is diverging fast. We saw it pop up to a 4.90 right here, currently sitting at a 1.58, meaning that as its price is continuing upwards, it's losing strength and momentum. As it's approaching that big golden zone, which is above 140, I probably wouldn't be chasing this thing down with purchases right now. I would be very careful purchasing it right now. I don't personally like to chase gains anyway, and we are sitting at a move of roughly top to bottom was at 10%, 12% was priced in. So nearly there. 12% does actually ironically put you right near that golden zone. So maybe has a little bit more room to the upside to go, but I do think things are going to get a little shaky once it pushes up towards that $140 or so mark. So I'd be very careful right here in terms of stock price. But remember, my whole thing is not stock price. My whole thing is not stock price. When it comes to Palantir, anyone who's tracked Palantir, anyone who's invested in Palantir knows that it just does this, right? It goes up and down, and especially around earnings time. You can get a pump that takes you up 10, 15% one day, and then by tomorrow evening, tomorrow afternoon, it's back down to where it started, right? The candle doesn't matter. It's the trajectory. The trajectory is what matters, and I think this is a great sign of trajectory from Palantir, and I think it's more than enough, a reasonable cause to say, that the people who are accumulating Palantir at these lower levels and the people who are building into these positions now that it is pushing towards, $125 or so, although it is very overpriced and overvalued in terms of traditional metrics, I still don't think it's a terrible thing for the people who are accumulating in some of these lower levels now that it's down 40% from its all-time high. Would I be buying right here? No. But it is a good sign, and I do like to see it. And I think there is a world in which if Palantir does come up, break out of this resistance, break through that golden zone, you could be looking at a Palantir trying to chase down $170. That's not super difficult from here. And it's only a move of 25%. We've seen Palantir run 25% several times pretty easily. I mean, this move alone, bottom to top, was what? Yeah, 27%. That was just this little move. So I do think Palantir has some legs, but I would be very, very careful with this thing right now. While it's approaching this major zone of resistance, it has that golden zone between 139 and 149. It has this descending level of resistance right around, let's call it $150 right now. That's going to be massive sellers territory, and I think it's more than reasonable to assume that the buyers are going to have to put up a massive fight to try to get out of this structure. And I would personally just be waiting and watching and holding rather than buying right now. I wouldn't be trying to chase Palantir down and purchase Palantir directly below a major resistance zone. That historically just doesn't go very well. It just doesn't go very well. But all in all, this is great. And I love to see, the impact that it's having. Now, one thing I am curious is what sort of impact this is having outside of them. You got Oracle climbing a bit, nothing crazy. You got ServiceNow maintaining, which is good. ServiceNow actually was giving signs that it was about to crash. So maybe this did instill a little bit of sentiment. Let's go look at nothing really from the hyperscalers, nothing super crazy there. Small rotation happening if I had to assume. Micron, pretty flat. AMD pushing up slightly. NVIDIA, pretty flat. So not a crazy big response coming from the market right now, which is a good sign in my opinion. But I do think all in all, this is fundamentally very valuable, and I'm glad to see it. I'm very glad to see it. This is cool. Do I have any Palantir holders in here? What are your if you are a Palantir holder, please let us know in the chat. Just put a 1 in the chat. I'm curious. And then let's go look at our poll. 56% of you believe that Palantir is going to erase these gains. Okay. Interesting. $5X Palantir 1. Cool. Got some Palantir here holders in here. Okay. Cool. This is a good sign. This is good for the business. Doesn't mean that it can't pull back. It absolutely can still dump from here. That is the unfortunate truth. But realistically, yeah, I think this is great. This is great for Palantir. It's very hard to say anything else. There's a great earnings report. Price is reflecting it right now. Not sure if they're going to continue to reflect it moving forward, as it does have a major earning or a major resistance zone sitting directly above it. I'm talking literally right above it. But yeah, hey Crollo, this is a good example of a golden zone and why it's so important, right? So like a lot of people right now are saying, do I want to buy Palantir? And what they can do is they can use the golden zone. They can draw in the Fibonacci from that high to this low, because you remember what we were talking about? It's retracing back up this move. They can go in and draw that golden zone and say, oh, we're sitting directly below the golden zone, and the golden zone sits in that trend line, right? We just talked about trend lines. So I don't want to buy right now because there's too much risk. This is a good use of the golden zone and the trend line together. Shout out to you, by the way, fellow. We have very interesting stuff here. Okay. Nice. How are we looking on SPY? Wow. Got a breakout on the SPY. Breakout on SPY today. SPY has now officially entered back into an uptrend. Will it last? I don't know. But as of 3.5, 4 hours ago, SPY is now officially back in an uptrend. it has not only broken back above the previous high, but it has also set a higher low as well. Now, some people say that this was a low. I do not consider this to be a low. This was the Russell 2000 reconfiguration. I base it off of this. And even if that is the case, we have now set a higher low from the previous low and a higher high. So SPY is now officially back in an uptrend. It does not mean that SPY has to continue upwards. It doesn't mean that SPY is just going to, go vertical. It just means that the door is open. The door for SPY to continue upwards is open. And I think it's more than reasonable to assume that if SPY does maintain this breakout of the golden zone and comes up and clears 760, that previous all-time high, I think we're looking at a $771 SPY to $785 SPY, somewhere right there. Now, we still do have a bit of work to do whenever it comes to SPY because, of course, as you can see here, we have that horizontal line of resistance sitting above us. This is the previous all-time high, so it is going to be a seller zone. Sellers sold here, so sellers will sell right here. The question is, are the buyers gaining enough strength to push SPY above that line, which is right around $760. We're going to find out tomorrow, probably, okay? But again, I think if we do see SPY breaking above that $760 mark, coming back up to 771 or 785 seems more than reasonable, which is a very easy move for SPY to make, which is like 1.7 to 3.6% upwards. But that's still big, especially, with my own portfolio personally. If I go look at kind of how this has gone, my portfolio being up 1.6% today is about $7,500. So if you're going to give me a gain here of potentially another 3%, that could potentially be another $16,000 worth of gain. So I'm here for that, right? I'm here for that. I think the biggest thing will just be whether or not SPY is capable of breaking through that resistance, through that horizontal line right here at 760, the seller zone, over the next 24 to 48 hours, which we will be watching very closely. But SPY has now officially re-entered back into an uptrend, and that is extremely exciting. That's extremely exciting, and it opens up the door for a continuation. It opens up the door for a continuation. That's very cool. The NASDAQ, let's see what this bad boy is doing. The NASDAQ is still currently trying to break its golden zone, so nothing to report quite yet. I made it very clear. I said when it comes to the golden zone, or when it comes to the NASDAQ, it's up in this golden zone right now and it's trying to break it. While it's in it, there's a big risk, right? This is risky that it's going to capitulate at any given point, just like it did there, just like it did there, just like it did here. Look for it to break this first. If it breaks 95, its next goal is 101. If it breaks 95 and 101, I think the NASDAQ opens up to 110 to 120. And that's big gains. I mean, we're talking about the NASDAQ potentially rallying to its all-time high of 7%, but after that, 17 to 30%? It's not going to come easily, don't get me wrong, but we've seen crazier things happen. I mean, we saw it last year. Look at what happened back here. We saw it come up to this golden zone right here, break through it, maintain above it, come up to your blue line, come up to your green line. We could easily see the same thing happen here. Come to the golden zone, break through it, come up to your blue line, come up to your green line. We've seen crazier things happen for sure. So when it comes to the NASDAQ, you're looking to see it break through that $96 level before you get too crazy, too excited. Okay. One thing I did want to talk about today, outside of the world of AI, is SoFi. SoFi is making an absolutely fantastic move. It actually just bounced off of that buyer zone again and is now rallying back up towards, guess what? The seller zone. And so right now, SoFi is not a buy, but it definitely feels good to see it. SoFi has already run all the way back up. Our position is now back in profit. I took my average cost down from $16.96 to $16.90 to $16.60 recently. So we got a bit of a 30-cent better average cost. And SoFi now for the very first time is approximately a $10,000 position. You guys know I said it from the very beginning 4 months ago that I wanted SoFi to be a $10,000 position in my portfolio minimum. And as of literally an hour ago, SoFi has officially hit $10,000. This is a 5-figure position in my portfolio, and I am very excited about it. I'm going to do the same thing with Robinhood, which is currently at an $8,000 position, and probably not MasterCard. I don't really care what this hits. I'd like it to be about $5,000, but we'll cross that bridge when we get there. But nonetheless, SoFi has made the move. It's up 10.6%. We did go ahead and get a purchase and on SoFi right around 15.20, so that's up quite a good bit. So right now, I'm just waiting. If we see, for example, SoFi's price push above $19, I am actually considering opening up a hedge short. A hedge short is whenever you see the price of an asset that you own pushing into a seller zone and you open up a short trade on it, which is a small, quick trade where you're betting that it's going to go back down. If it does, you make free money and you can reinvest it and buy more when it goes lower. That's exactly what I did right here. If it doesn't and it pushes through it, you let you have that stop loss set. And what will happen is you might lose like $30 or so as it breaks through, but then your macro position is running so much that it doesn't really matter. It eats your gains a little bit, but not a lot. So it is one of my favorite things to do. I did it right here. I forgot to do it right here, so I plan on doing it here. So if SoFi does continue up a little bit more, I am planning on going in and opening up a bit of a short hedge. Some platforms don't allow you to do it. You can do it over on Liquid. This is the platform that I personally trade on. I showed you guys this several times recently, but whenever I'm doing like my 3x long trades or my 3x short trades or whatever it may be, I'm doing it over on Liquid. They give you the option to go in and trade basically every major stock, SanDisk, Micron. These are some of the ones that we've gone on recently, Google, etc. And we've made some decent gains, right? 16% gain, 9% gain, 42% gain there, another 9% gain here. I will let you guys know that if you are someone who is trading stocks, especially if you're doing it on a leveraged account, Liquid is a great option. It is available in many different regions, and many of you can use it. I've put on and removed tens of thousands of dollars, and I am an affiliate partner of theirs, which is cool because you guys do get a 10% fee discount. Sorry, I couldn't think of the word. A 10% fee discount there if you do use buy link to Liquid. Okay, so I'll leave that down below. That is available in the description of this live stream right now. So if you are trading, check out Liquid, and that is where I do my personal trades. So fine, absolutely smashed it. So happy to see this position over $10,000 for however long it may last. Absolutely beautiful move. But I mean, at the end of the day, we're looking at SoFi the other day, and it released such a fantastic earnings report. It was hard for me to imagine that the market was going to brutalize it and beat it down for that for long. And I thought there was a very real chance in which SoFi came to like 14 or below level. I thought it might come down into my sell the house to buy more zone. I didn't think we were coming down into the sell my wife to buy more zone, but I was ready to do what a man has to do to buy more SoFi. But I did think that it was coming down to these lower levels, and it didn't. It's maintained very well. And yeah, it feels really good. It feels really good. Can you give us a demo on how to do the 3x? Yeah. I mean, it's pretty simple. So if you go to Liquid, if I wanted to open up, say, a short trade on Micron, I'd go to Micron, press the sell short button, choose my size of my trade that I want to deploy, and then I choose my leverage. So we come here, come to 3x leverage. And so what you can see is that now I'm going to be injecting $100 of margin. So it's a $100 investment. The order value is going to be $300 because I'm on 3x leverage. I can put on a take profit and a stop loss if I want to, and I can either choose isolated or cross margin, but I always tell people to just use isolated most of the time. It also tells me at what point I would be liquidated, which would be $1,051 on that $100 position. So it's pretty simple stuff here, honestly. But I am going to be doing a leverage trading / liquid tutorial either next weekend or the next weekend because a lot of people have asked me how I do swing trades. That is an educational video I have planned pretty soon here. But nonetheless, yeah, very good there on SoFi. Robinhood seeing a decent bounce as well, but nothing super exciting on the day. Meta actually getting a bit of a returner here. Not exactly sure why, to be honest, but good for it and good to see Meta doing that. I've made it pretty clear, though. You know, when I look at Meta, while it's below that red line, danger is amongst us, and it needs to break above that before it can ever open up for anything exciting. So I'm just watching Meta. If it breaks a red line, maybe I'll consider making a move. Microsoft is currently sitting right here. Microsoft is sitting in the golden Fibonacci zone still. Major point of resistance. As this is happening, we are also seeing the toolkit flashing a plus 4.26 reading on the daily. It just popped up a lot. Yesterday, it was at 3.5. Now it's at 4.26. It's climbing fast. This is one of the highest readings that it's given us since way back here before this cool down. So when I look at Microsoft, I do go, ooh, I'd probably be careful right now. But I made a whole video about that this morning. I'm not going to yap about it too damn much. When it comes to Amazon, very similar position. Very similar position. Currently approaching a major extension zone. This is usually when the sellers will step in from Amazon between 295 and 317. It's currently at around 284. So yeah, Amazon getting a nice bump, but still kind of being careful with that. Same thing with Google, as Google's approaching that golden Fibonacci zone. So all in all, a pretty solid day here in the market. I mean, really strong price performance, a great earnings report from Palantir. We're about to get their earnings call coming up here in about 25 minutes. Yeah, great day. And I mean, this was an absolutely smashing quarter for Palantir, which I have mentioned many times is great for the AI trade. Love to see it. I love to see it. Do you ever use Super Trend Indicator? I used to a lot more than I do now. I don't nearly as much as I used to. What do you think about Poet? I know my buddy Josh talked a lot about Poet at one point. Curious to hear your thoughts. You won't need another indicator if you buy the trade toolkit. Yeah, appreciate that. How's the analysis on AMD? Very, very similar to kind of what it's been. My general positioning on AMD is that while it's below this red zone, while it's below that red line right there, there's a lot of danger that is present. That is a massive seller zone. This is actually identified by the toolkit as well. If I get rid of everything, you can see it. One sec. You can see what I mean. Look, so the toolkit identified it for you. This is a major buyer zone. This is where the buyers were stepping in and pushing the price up. Now the seller zone is here. So it flipped from a buyer zone to a seller zone, which is why the toolkit turned it from being green to being red. Remember, this is the toolkit that I designed for you guys because I wanted to do my analysis for me. And so what it'll do is it'll automatically identify these moments in which something like this happens and show you. So right now, what this means is that $496 is your level to beat. While we're sitting below $496, especially like right under it, there's just a lot of danger that AMD does get rejected back down here to around 393 to 387 because that's previous support. So when I'm looking at an AMD, I'm just going like, yeah, this is a hold. This isn't particularly a great buying opportunity. This isn't a great selling opportunity unless you somehow caught like $425 bottom. This is just a holding moment. Can AMD get above 496 or not? What I think is going to happen is that tomorrow's earnings report is going to send it either up through 496 and back up towards these all-time highs around 561, or it'll be the reason why AMD gets rejected to 393. So I think either like within the next 48 hours, we're looking at like a $550 AMD or a $400 AMD. That is a big $150 gap, which is why right now, knowing the gap that's between those two, I think it's just a hold. I think AMD is a very clear hold right now. Crazy still never got that Taco Bell analysis. KTOS. Yeah, I can check out that. Does the toolkit work on a free trading view account? Yeah. So as you can see right now, I only have 2 tools open, no gaps candles in the toolkit. And yeah, the toolkit works. It works like a charm on the free trading view account. Now, if you want to open up another indicator, you will need to remove something and then add it in, because for the free trading view account, you can only have 2 indicators open at once. So if you wanted to, open up your Bollinger Bands, for example, that would be available for you there. You'd have to give that a click and then open it up. But I personally just keep no gaps candle in the toolkit on, and it does basically everything that I need to do. For those of you who don't know what this is the TH toolkit. This is a toolkit that I personally designed. It can consist of a few different things. You have this meter right here. As the price goes up, the meter goes up. When the meter is between +4 and +5, it means the price is getting too high and a pullback can happen soon. When the meter goes down because the price is going down and it falls between -4 and -5, it means that the price is getting a bit too low, quote unquote, and easily could start to reverse soon. It also plots out your buyer and seller zones. The red lines are your seller zones. That's where you can expect the sellers to be. The green lines are your buyer zones. That's where you can expect the buyers to be. That's available for you. There's like 200 of you using it now, but I do have the link down below to the toolkit if you're interested. What I would recommend you do though, what I would recommend you guys do if you don't know what the toolkit is, head over to my channel and go watch this video. Stock investors, you need to see this indicator before Monday. I broke it down for 18 minutes, how you can use it and what it is. So that's probably a bit of a better next step. So go check that out. Now, when it comes to KTOS, I didn't forget, don't you worry. Kratos Defense. Oh, didn't mean to do that. Meant to turn that off. I would give this a decent buy. I don't know anything about this. Remember, I'm not a financial advisor. I'm literally just a random. Is that funny? I'm going to say it anyway. I'm just a random brown man in a random purple room somewhere in the world. So take that with a grain of salt. But with that in mind, when I do look at Kratos from a purely technical perspective, one thing that I can say is that it has come down into its breakdown zone, which ranges between $52 and $41. This is where you can expect the price to come down to once it falls below this golden Fibonacci zone. It fell below this golden zone and has now reached the breakdown zone. This is typically where you'll see things start to try to change. Doesn't mean that it will change, but things will usually try to change right here. And so, yeah, I would, within reason, say that as long as this pullback isn't being caused by something terrible happen fundamentally in the company, and the company is still fundamentally strong, this is where I personally would be willing to do some dollar cost averaging. So yeah, I'd give this a buy rating on the long term. Short term can still easily continue to get ugly from here. Like you could see it push to the bottom side of like 41. Worst case scenario, you could see it come down to 25.52, $25.52, somewhere down here. Doesn't seem super likely in terms of just general momentum from my own perspective. But again, I've not looked at this before, so it's just kind of a decent guess. Another thing that makes me feel that way is this divergence. Do you see, look at this number right here. Do you see how the HCI was at 4.48 minus 4.48 whenever we were down here? Well, once it came down here, it was 2.83. That's called divergence. And it means that although the price is going down, the HCI is trending up. And that's usually a sign that it's resetting and building momentum. So a pop towards the upside could happen. And you could see it try to push up towards $64, that previous resistance point and support point. So yeah, I'd actually give Kratos a buy right now. I'm not buying it. I'm not telling anyone that they should buy it. But if I was looking at it from a technical perspective, I would give it a buy rating. Jeremy, listen, is bullish on Celsius and they've earnings coming up. Any thoughts on that one? Not a ton of thoughts. My thing is, like, I do think a lot of the ones that Jeremy talks about are great, right? You got Celsius, you got Elf on a Shelf, you got Cheesecake Factory, you got obviously AMD, you got Netflix. You have great ones. My thing is, I try not to over saturate my brain in terms of the investments that I have. I like to try to keep it simple. I try not to look into too many different industries or too many different niches. That's why a lot of the stocks that I own are very similar to each other. That's the reason why, in this portfolio, I have Robinhood, SoFi, and MasterCard. Robinhood and SoFi are very similar. MasterCard is in a similar world of finance, right? So I try to stick to the world of finance. Or if I'm going to go into, another position or something, I might do all three hyperscalers that have a similar business model but different attributes. Something like that, rather than, having a portfolio that consists of energy drinks and cheap beauty and entertainment subscriptions and an AI GPU CPU provider. It's just not my style of investing. I'd rather be concentrated on specific niches that I truly understand thoroughly. Like when it comes to fintech, when it comes to these sorts of platforms like SoFi and Robinhood, I understand these companies in and out. I understand their models in and out. I understand their industry in and out. It's hard to understand a company and an industry if you're looking at 10 different ones. So no shade to him. He is a much better investor than I am. It's just not my style. I'm more focused on, tech, finance. I'm like a fintech investor realistically. I have a lot of investments in fintech, even in my private accounts. I have some other stuff, but yeah, a lot of fintech, a lot of tech. Beta technology. I will try to find it real quick. Remember the earnings call, Palantir earnings call in 15 minutes. All right. Beta Technologies. That looks pretty good. That looks pretty good for them. Missed earnings, missed earnings. Yeah, I mean, I don't know anything about this, and it is still very new. It's only been around since last year, so take literally everything that I'm about to say with a big or a tiny, tiny grain of salt. But when I do look at what's happening here, I mean, you are seeing great signals from it. It got these two capitulations or three capitulations. It seems as if the market bottomed out here after this earnings report. It got a good earnings report to turn things around a little bit, and it has kind of provided a bit of stability to their price, Beta Technologies. And you're also currently seeing it breaking through this downward sloping trend line, meaning that buyers are taking control. Doesn't mean that they're going to take control, but they're trying to take more control now. And you easily could see it try to push back up towards, maybe $22.57 or something to retest previous top side liquidity. The only thing about it, though, is that right now it's very dangerous because there is so much resistance on top of it. So if I draw just a red box real quick and you look at it, there are rejections here, here, and here. Where we are right now, this is a major rejection zone between $20 and $18, major resistance. So while Beta Technologies is below $20, I would be very careful while it's close to it, especially. If it does finally break above it, though, don't be surprised to see it come up towards $22.50, which could be a nice 10% move. But one way or another, I do think from a macro perspective, it is building good structure. It seems to have stabilized a bit, and I would be willing to do if I like this stock, if I knew anything about it fundamentally and I wanted to buy it, I would be willing to buy in this phase that it's in now. I would just be very, very careful knowing that there's major resistance sitting directly above us and maybe hold off a bit, hold a bit of cash just in case it does get rejected back to around 16 bucks. How much is the toolkit? The toolkit with the discount code from that last video is 90 bucks. One-time payment, never have to pay again. Yeah, no problem, homie. You know, I will say, what is that? What did I draw? Is that the gold? There's no way that's the golden zone, right? No. Okay, yeah, it's about to say it's too big. It's too big to be the golden zone. Yeah, SK Hynix is just one that I'm not particularly super interested in right now, but it is actually showing some really good signs. So when when you look at the when you look at SK Hynix, hey Marcus, I saw you in the chat just now. Marcus, go watch this video. This one, stock investors, you need to see this indicator before Monday. Watch this video and then click the landing page link in that description. It'll tell you everything you need to know, homie. I got you, homie. But yeah, look at what happened here. So, right, like SK Hynix got a beautiful run. It came back up to trend. It got rejected. We expected this. This wasn't a surprise. But look, SK Hynix has come back down and found the buyers. The same people, the same area where sellers were stepping in back here, buyers are stepping in here now, and it's trying to push its price back up. Now, will it succeed? I have no idea. But this is actually a very good sign for SK Hynix. And if there's a world in which we see it come back up, and let's say it comes back up and hypothetically breaks out of here and clears 162. I mean, dude, you could be looking at an SK Hynix pushing up towards $180 to $190 almost out of nowhere. That sort of move is very possible with a high beta stock like SK Hynix with so much leverage behind it, especially from South Korea. So these are great signs from SK Hynix right now. And yeah, I'll be curious to see how it plays out. I would still give this a hold rating. I wouldn't be buying it while it's close to a golden zone because it easily can get pulled into it at any given point. And it also has a major resistance level right above it. So like the upside is very capped. So I'll give SK Hynix a hold, but these are actually good signs. These are good signs. Palantir. Oh, Ion Q. Okay. Yep, Ion Q is kind of doing what we spoke about in the last one. I told you all, you know, if you're an Ion Q investor, what you're looking for is this golden zone to hold. You know, I gave this a cautious buy when it came to the bottom side of this golden zone, and as you can see, it's now bouncing off of that bottom side of that golden zone and trying to break above $38, which is the top of the golden zone. So, Ion Q wouldn't be a buy for me anymore. It would have been a cautious buy while it was down here, and it's glad to see. And now it's kind of just a bit of a wait. Let it ride out. Let it see how things go. Maybe does it push back towards top side golden zone? Does it come back up to $50? You know, like these are the questions that you want to try to answer next. Now that you've maybe captured a good purchase and are riding it upward. So buying opportunity is a bit behind you, I would say. Yeah, I'd probably give it a hold as well. Let's see. And you know, one thing to be clear, like, you know, to be fair, is if you look at what happened here, let's say what happened back here is what happens here. Yeah, you could see Ion Q running, just running. So if you purchased right here, this was still a great time to purchase. I guess my thought process is like there's no guarantee that this is about to happen. The better time to purchase was a bit lower than we are now. So it's like if you are going to be doing buying, I would be doing it very in intervals, and I would be doing it very carefully. I wouldn't be aping it right now by any means because it's already gotten elevation off that support. Like where I was saying that it was a cautious buy, it's now up like 20 plus or 15, 16, 20%. So yeah, I'd be very careful with it right now. Palantir broke to 12%. Yep, there you go. Breaking into the golden zone. That is a huge sign for Palantir. Like I told you all, we had a 12% move priced in. Where are we at? Yeah, 12% move priced in for Palantir. And it's now gotten that move. Let's see. We are approximately now at, yep, there you go, 13.6%. And it's actually gaining a bit of strength as it's pushing into that golden zone, which is a great sign. Remember, the goal for Palantir now that it's made this move up is to break through the golden zone and the trend. So Palantir needs to break above $155 before we can go like, oh my God, Palantir might be back. While it's in this golden zone, there is a huge risk of it pulling back, just like it did there, just like it did there, just like it did there. So you're going to want to be very careful with Palantir, but this is a huge sign. This is a huge sign for Palantir, and it's a very good one. A good signal that this could continue in the right direction if and only if Palantir breaks through the golden zone in the downward sloping trend line. Dude. Very good. Do a quick and then a Nebius. Let's see here. Nebius is actually doing a really good job right now. Give this one a few more days before making a move, but it looks like Nebius is trying to break out of this descending structure. What you're going to want to see from Nebius right now is whether or not its price can come up and break 230, because there's a two-step process, right? The first thing that you need to see is it being able to break out of the structure. Once it breaks through the structure, it then needs to come up to the previous high in the structure and break above that. Once it does that, it completely invalidates the downward structure and confirms the breakout to the upside. And at that point, that's when you can see things start getting real nice and you can start getting nice move upwards. The reason why you generally want to wait is because it's very common that you will get a structure like this. You set in the high right here around 230. You break out of the structure, hit that high, and come back down in because you're not strong enough to maintain out here. So I always tell people in a moment like where you just broke out, but you're still in between that support down here and the resistance up here, just wait. Don't buy, don't sell, don't do anything. Just see if Nebius can break above this $230 mark. Because if so, that's what opens you up. Like if Nebius can break above 230, that's what opens up the door for a potential move upwards of like $300. You know, you could be looking at a Nebius at 256, 300, 372 if things go really well. But it needs to be able to break above this because it's on a downtrend. Remember, high, lower high, lower high, lower low, lower low, lower low. It's still setting a downtrend. It has to break the downtrend by getting above that high before we can get excited about it at all. So just be careful with it for now while it's still below that high. Look at SanDisk real quick. And hey, guys, if you have been appreciating and enjoying all the value last week, this week, if you're enjoying the technical analysis and all that sort of stuff, please do hit that like button. It is super, super helpful. SanDisk is in a very, very much of a hold situation for me right now. It bounced off that bottom side golden zone. It's now sitting directly below its trend line. Now is like no, it is off of it a bit. There we go. Still a bit elevated off, but still close, very close. Yeah, whenever I look at SanDisk, I mean, I basically immediately just go, nah. Now that it's gotten in, a higher low, it's starting to work back up towards this trend. There's going to be a lot of danger ahead of it here, so I'm not interested in buying here. We did get that trade from down here, so yeah, SanDisk is a hold for me until it can clearly break above the same trend that's been forcing it down since June 26th. We'll look at Intel real quick. Very similar structure here, very similar story when it comes to Intel as many of the other ones. What you can see here is that Intel is clearly in this some sort of weird little structure right now. It's kind of hard to tell where it is. My gut would immediately go like point in this direction and say, it was in this clear structure, it tried to break out and failed, and now it's broken out again. And if that is the case, it is a good sign. But remember, when you're in an instance like this, it doesn't really matter just when you break out of the structure because you still need to see Intel getting above this high. So if it's one of those situations where you're like, is Intel back? No, Intel's not back until it breaks at least 106 and holds above it. That's the previous resistance. That's the previous seller zone. That's where the liquidity is. That's what will flip this downtrend to an uptrend. So that's what matters. That's where the sellers are going to try to protect. So if I'm an Intel investor, I'm just kind of in my slow, steady dollar cost average mode and looking to see if Intel can break 106. That's whenever I would be more confident that it is quote unquote back. So right now I would give Intel a long-term buy, short-term, mid-term hold. All right. Man, we've done like an hour straight of analysis. Oh man. Smashing it, dude. Smashing it. But yeah, we have approximately 5 minutes until Palantir earnings, 4 minutes. So we're going to go ahead and call it a wrap on the analysis section of this video. And we are going to get ready for the Palantir earnings. Let me set it up to where can I theater mode that? Oh, I guess not while it's here we go. All right. I love that. I love that. Let's drop that huge like. I agree. I agree. Smack that thing. Smack that thing. Appreciate it, folks. Yeah, I got this live stream starting in about 2 minutes. Happy to see you all again today. End of the day here for me. Coming up on the end of the day, at least. Share screen, entire screen, share system audio. There we go. What a day. What a day. At one point this week, I was down $7,500 on the week, and now I'm up $11,000 on the week. That is nuts. What a swing this market's been making. Let's see. I don't think there's any sound coming out of there. Do you guys think that Apple is a good buy now? I would give it a very, very cautious buy rating, like a 2 out of 10 level buy rating, because it is back at this golden zone, which is historically a strong level of support. The problem is that it easily could come through this golden zone and this trend line because it's being beat down so much and come back down to like 274, which is still a pretty solid move from here. That would be Apple falling another 8% from here. So I'll give it a very, very cautious buy, but not a buy that I would be very optimistic about. All right.
Good afternoon. I'm Anna Saro from Palantir's finance team.
Can
and
y'all
I'd like
hear
to
that?
welcome you to our second quarter 2026 earnings call. We'll be discussing the results announced in our press release issued after the market close and posted on our investor relations website. During the call, we will make statements regarding our business that may be considered forward-looking within applicable securities laws, including statements regarding our third quarter and fiscal 2026 results, management's expectations for our future financial and operational performance, and other statements regarding our plans, prospects, and expectations. These statements are not promises or guarantees and are subject to risks and uncertainties, which could cause them to differ materially from actual results. Information concerning those risks is available in our earnings press release distributed after the market closed today and in our SEC filings. We undertake no obligation to update forward-looking statements except as required by law. Further, during the course of today's call, we will refer to certain adjusted financial measures. These non-GAAP financial measures should be considered in addition to, not as a substitute for or in isolation from, GAAP measures. Additional information about these non-GAAP measures, including reconciliation of non-GAAP to comparable GAAP measures, is included in our press release and investor presentation provided today. Our press release, investor presentation, and other earnings materials are available on our investor relations website at investors.palantir.com. Over the course of the call, we will refer to various growth rates when discussing our business. These rates reflect year-over-year comparisons unless otherwise stated. Joining me on today's call are Alex Karp, Chief Executive Officer, Shyam Sankar, Chief Technology Officer, Dave Glazer, Chief Financial Officer, and Ryan Taylor, Chief Revenue Officer and Chief Legal Officer. I'll now turn it over to Ryan to start the call.
Our Q2 results are unprecedented, but entirely unsurprising, as the abrupt market shift in LLMs that we've been warning you about for years is now here. We delivered 93% year-over-year revenue growth, our highest ever. The story of this quarter is, once again, our U.S. business. It now comprises over 81% of total revenue and grew 115% year over year and 23% sequentially. Our U.S. commercial revenue growth accelerated to 149% year over year and 28% sequentially. And our U.S. government revenue grew a remarkable 90% year over year and 18% sequentially. These top-line results are accompanied by a Rule of 40 score of 155 and $1.22 billion of adjusted free cash flow. We closed 220 deals worth $1 million or more, of which 98 deals were worth $5 million or more, and 73 deals were worth $10 million or more. Record highs across the board. These results are a clear indication of the profound value we've unlocked both for and with our customers who dared to cross the chasm with us. In contrast, enterprises that are not using Palantir are seeing their token meters spinning endlessly just to get slop without any correlation to value. This token model may be working for the labs, but it is not working for anyone else. It's breaking corporate budgets without results to justify the expense. And worse, companies are paying to give away their most important secrets, the very basis for their competitive advantage, ultimately contributing to the commoditization of their own businesses as their secrets become the training data embedded in the foundations of all future models. On our side of the chasm, what enterprises demand is AI sovereignty, owning the operational definition of the data, logic, actions, and security of their enterprise. An organization's data is its treasure. In its richness is the alpha. We are fully aligned with our customers, building a stack that enables the compounding of their alpha. Our deep alignment allows our customers' ambitions and our own to become one. As Kirkland and Ellis highlighted, quote, "Through our work with Palantir, we have built a new operating model for legal services, one that centralizes and compounds the expertise of our most senior lawyers. What used to take days for a lawyer to analyze, discuss, and draft now happens in minutes. This would be impossible without the ontology. We do not see this as a vendor relationship or a one-off endeavor. We think this is a revolutionary change in how our work gets done. This is what we do with our customers across industries, and the deals we are closing are a testament to the monumental shift in the AI market that's underway as we speak." In our U.S. commercial business, we closed $2.1 billion in TCV, with a 271% year-over-year growth rate on a dollar-weighted duration basis. A multinational technology company began working with us in the fourth quarter of last year at one operating company and expanded on their success with our platform to deliver revolutionary impact across their full portfolio, converting to a 3-year, nearly $370 million deal last quarter. Customers are decisive and bold about taking the next step with Palantir. A global asset management firm started working with us in Q1, then converted last quarter to a 3-year, $35 million TCV deal spanning asset management automation and investment lifecycle intelligence across 4 verticals. After an agent camp in May, a global software and services company signed an initial $15 million 5-month deal last quarter. And a leading nonprofit health system signed a pilot at the end of 2025, and then last quarter converted to a 3-year partnership at $37 million TCV. Our U.S. government business remains a source of extraordinary strength, with momentum across both defense and civil. We continue to take great pride in our U.S. government work, equipping our nation with the most advanced, battle-tested AI capabilities. For Palantir, this is our calling. Our customers are making the decision to go deep with us with greater urgency and conviction than I've ever seen before, choosing AI sovereignty over dependency and compounding their alpha in a way that their competitors and adversaries will forever envy. I'll now turn it over to Shyam.
Thanks, Ryan. Ryan just talked about the incredible customer momentum behind sovereign AI. I want to spend some time on the underlying product investments that positioned us for this moment. AIP succeeded because it's the best, most ergonomic environment for AI in the enterprise. It integrates mixed mammal AI teams across heterogeneous, interdependent workflows and delivers the fastest implementations that turn tokens into real economic value for our customers in complex, high-stakes environments. What makes it work is exquisite and layered. Data integration and transformation, ontology and actions, security and audit, workflows, agent SDKs, agent orchestration with telemetry and observability, evals and customer-specific benchmarks, AIP Evolve, and our latest investments in post-training, both supervised fine-tuning and reinforcement learning. Every layer builds on our foundational primitives, and every layer flows together. This infrastructure captures the rich, operational telemetry to feed the compounding loop, an automated model factory that runs inside the customer security boundary and accumulates intelligence in weights they control. Last quarter, I said tokens are the new coal and AIP is the train. Now our customers can build their own locomotives. AIP is where your sovereign AI is built, deployed, and compounded. We're excited for a new era, not one of bench maxing, but of bench making. The assumption that the frontier is actually the best performing is just not borne out in practice. Within 24 hours of bringing Nemotron Ultra into our stacks, we found 5 production tasks where a standard Nemotron Ultra model without post-training beat frontier models. This underscores that a handful of common benchmarks can be gained. That era, bench maxing, has ended. The new era is bench making. A customer-specific benchmark is not just a scorecard. It's a hill to climb. It's the normative orientation that directs your entire operational workflows and post-training pipeline. It defines what better means on your terms, for your business, with your strategy, and then everything optimizes against it continuously. And because the benchmark is yours, the trade-offs become yours too. AIP gives you the control plane to trade cost, performance, and latency against each other, and to decide where you run your weights versus theirs, workflow by workflow, continuously. Now you can have a continuous improvement cycle that compounds your alpha into your weights. AIP was built for this. We continue to see that our product is winning head-to-head. The others are focused on productivity. We are laser-focused on turning tokens into real economic value for our customers. The reality is that the market has created far more intelligence than it has converted into value. A more powerful model does not solve this problem. The limiting factor is the rate of AIP deployment. A major Silicon Valley tech company recently ran a bake-off, a frontier lab and its deployment team against AIP and our forward deployed engineers. Remember, only Palantir has FDEs. Everyone else has sparkling sales engineers. The lab picked a ticketing automation problem and failed to deliver anything of value against it. We built agent swarms for each of our customers, proactively recommending marketing, packaging, and pricing changes to drive revenue and utilization. This work converted into a $10 million ACV contract. The lab was shown the door. Same customer, same timeline, same models. The only difference was AIP and Palantir's unique FDE tradecraft, and it was determinative. It was an incredible quarter in U.S. government, measured not just by 90% year-over-year revenue growth, but by mission impact. Maven continues to deliver for the Joint Force, from the factory floor to the foxhole. We had our first program in the Maven platform launched this past quarter, where a government program of record chose Maven as the platform that they will operate their program in, taking advantage of our open data standards, ontology, developer tooling, peering, security, and other platform primitives to go faster and deliver seamless experiences and capabilities to the department's chosen command and control platform. Maven has also continued to win as the developer and builder platform for the Joint Force, with over 25,000 builders. Uniformed service members, civilians, contractors, and companies are developing agents and applications in and on the platform at the speed of war. And for all that growth, our Department of War trailing 12-month revenue is still less than 25 basis points of the Pentagon's budget. Finally, last week we held our first American Builder Summit in DC to celebrate the Americans who stepped forward to join the American Tech Fellowship and to let them make the case that AI is creating jobs and prosperity by sharing their stories and showing what they built. We created ATF because the most transformative applications of AI that we saw were being driven by people without traditional tech backgrounds on literal front lines and factory floors. We now have over 1,000 ATF grads. One of our speakers, Jonah, who joined Tabit as a submarine parts manufacturer 13 years ago, straight onto the factory floor. He's a proud blue-collar worker who still turns wrenches for a living. And he built an AI application that took production planning from 30 to 40 days down to less than 1. AI alone cannot do that. It takes AI in the hands of the American worker, the tribal knowledge earned through success and failure on the line, the insights only they have. The models are commodities, but the American worker is not. I'll turn it over to Dave to take us through the numbers.
Thanks, Sean. We had a phenomenal second quarter, delivering our highest ever reported year-over-year revenue growth rate of 93%.
That does not sound
and
like
our
a human
highest ever
being.
adjusted free cash flow of $1.22 billion, representing a 63% margin and 115% growth year-over-year. We surpassed billion-dollar milestones in GAAP net income, adjusted free cash flow, and adjusted operating income. Revenue in our U.S. business grew 115% year-over-year and 23% sequentially in the second quarter. Our U.S. commercial business accelerated to 149% year-over-year and 28% sequentially, and our U.S. government business grew 90% year-over-year and 18% sequentially. We closed $2.132 billion of U.S. commercial TCV bookings, representing growth of 153% year-over-year and 81% sequentially, nearly $800 million above our prior highest U.S. commercial bookings quarter. We are seeing the immense demand of enterprises recognizing the need for sovereign AI to retain full control of their alpha. On the back of this exceptional, continued strength in the U.S. and accelerating demand for our sovereign AI capabilities, we are raising our full-year U.S. commercial revenue guidance to an excess of $3.424 billion, representing a growth rate of at least 134%. We're also raising our full-year 2026 revenue guidance midpoint to $8.154 billion, representing 82% growth year-over-year, an 11-point increase over our full-year 2026 revenue guidance from last quarter, and our largest ever full-year revenue guidance raise. Turning to our global top-line results. Second quarter revenue grew 93% year-over-year and 19% sequentially to $1.935 billion. Second quarter U.S. revenue grew 115% year-over-year and 23% sequentially to $1.573 billion. Revenue from our largest customers continues to expand. Second quarter trailing 12-month revenue from our top 20 customers increased 67% year-over-year to $124 million per customer. Now moving to our commercial segment. Second quarter commercial revenue grew 110% year-over-year and 22% sequentially to $945 million. We closed $2.337 billion in commercial TCV bookings in the second quarter, representing 118% growth year-over-year. Our AI platform continues to dominate the U.S. market as the only real choice for operationalizing LLMs, particularly as more customers demand full ownership over the data, logic, actions, and security of their enterprise. Second quarter U.S. commercial revenue grew 149% year-over-year and 28% sequentially to $764 million. We closed a record-setting $2.132 billion of U.S. commercial TCV bookings, representing growth of 153% year-over-year. Over the past 12 months, we closed $5.964 billion of U.S. commercial TCV bookings, a 117% increase from the prior 12 months, highlighting the accelerating demand for AI that creates real operational value. Total remaining deal value in our U.S. commercial business grew 124% year-over-year and 27% sequentially. Our U.S. commercial customer count grew to 653 customers, reflecting growth of 35% year-over-year and 6% sequentially. Second quarter international commercial revenue grew 26% year-over-year and 2% sequentially to $182 million. Revenue from strategic commercial contracts was approximately $400,000 for the quarter, representing 0.02% of overall revenue. We continue to expect revenue from these contracts to be less than $500,000 in each remaining quarter of this year. Shifting to our government segment. Second quarter government revenue grew 79% year-over-year and 15% sequentially to $990 million. Second quarter U.S. government revenue grew 90% year-over-year and 18% sequentially to $809 million. This growth was driven by continued execution in existing programs and new awards, reflecting growing demand for our AI platform in government. Second quarter international government revenue grew 42% year-over-year and 5% sequentially to $181 million. We closed $3.4 billion of TCV bookings, up 49% year-over-year. On a dollar-weighted duration basis, TCV bookings grew 129% year-over-year. Net dollar retention was 157%, an increase of 700 basis points from last quarter. We ended the second quarter with $13.1 billion in total remaining deal value, an increase of 83% year-over-year and 11% sequentially, and $4.9 billion in remaining performance obligations, an increase of 103% year-over-year and 10% sequentially. As a reminder, RPO is primarily comprised of our commercial business, as it does not take into account contracts with an initial term of less than 12 months and contractual obligations that fall beyond termination for convenience clauses, both of which are common in most of our government business. Turning to margin and expense. Adjusted gross margin, which excludes stock-based compensation expense, was 86% for the quarter and reflects an increase in costs associated with taking on cloud hosting for one of our government customers. While this change led to higher cost of revenue in Q2, going forward, we believe it will power faster time to value, drive greater efficiency, provide greater cost certainty to the customer, and enable us to expand their future workflows. Adjusted income from operations, which excludes stock-based compensation expense and related employer payroll taxes, was $1.194 billion in the second quarter, representing an adjusted operating margin of 62%. Q2 adjusted expense was $741 million, up 14% sequentially and 37% year-over-year, primarily driven by the continued investment in our AI platform and technical hiring. As in prior years, we expect a significant ramp in expense in the third quarter due to the seasonality of new hire starts and other product and marketing initiatives. We remain committed to investing in the most elite technical talent, as well as R&D for our product pipeline and sovereign AI efforts, all while delivering on our goals of sustained GAAP profitability. Second quarter GAAP operating income was $912 million, representing a 47% margin. Second quarter GAAP net income was $1.062 billion, representing a 55% margin. Second quarter stock-based comp expense was $265 million, and equity-related employer payroll tax expense was $17 million. Second quarter GAAP earnings per share was 41 cents. Second quarter adjusted earnings per share was 41 cents. Unrealized gains from our holdings in SpaceX resulted in a 3-cent tailwind to GAAP EPS and a 2-cent tailwind to adjusted EPS in the quarter. Additionally, our combined revenue growth and adjusted operating margin accelerated to 155% in the second quarter, a 10-point increase to our Rule of 40 score from the prior quarter, and our 12th consecutive quarter of an expanding Rule of 40 score. Turning to our cash flow. In the second quarter, we generated $1.216 billion in cash from operations and $1.22 billion in adjusted free cash flow, representing margins of 63%. We ended the quarter with $9.2 billion in cash, cash equivalents, and short-term U.S. Treasury securities. Now turning to our outlook. For Q3 2026, we expect revenue of between $2.16 and $2.164 billion, and adjusted income from operations of between $1.292 and $1.296 billion. For full year 2026, we are raising our revenue guidance to between $8.15 and $8.158 billion. We're raising our U.S. commercial revenue guidance to an excess of $3.424 billion, representing a growth rate of at least 134%. We're raising our adjusted income from operations guidance to between $4.889 and $4.897 billion. We are raising our adjusted free cash flow guidance to between $4.5 and $4.7 billion. And we continue to expect GAAP operating income and net income in each quarter of this year. With that, I'll turn it over to Alex for a few remarks, and then Anna will kick off the Q&A.
Obviously, we are loving these results and
Well, that's better.
loving what they mean for our customers and broadly speaking, the West. Reflections on how we got to 93% aggregate growth, just under 150% growth in U.S. commercial, and an aggregate growth of 115% in America, which is astonishing, even surpassing the already anomalous results we've posted in the past, and at a very significant scale. The story really does begin at the beginning when we dedicated ourselves to our most important partners in the U.S. government, and we built products to deliver value for them. We delivered those value for them by looking at the world in its naked state. We did not have we did not have AI available. We had to work with NLP. So we had to develop forward deployed engineer model to extend the technology and deliver value. The nascent version of ontology was developed. Sham, Aki, others strapped Blackberries around their head and made the code work in sensitive environments. And what we learned and what was built into this company is that there are things, values, structures that are more important than purely extracting value from a client. And we rejected the way in which we were being taught in Silicon Valley to build a software company. At the time, Palantir, of course, is now both infrastructure, software, FDEs, orchestration, and business know-how. So it's a completely different hybrid. But at the time, we were being told our job was to trick the clients into giving us money for something that made them attached to us, but really added no value. So essentially a parasitic model. And in the rejection of that, we fully aligned with our partners. Now, to do that, as we went through the years, we built PG, Foundry, Gaia, Maven, Ontology, AIP. Now we're taking the AIP stack and extending it for sovereign AI, which requires us to be able to orchestrate and fine-tune models to provide a completely sovereign stack to our partners. But what is the philosophical importance of that? We are offering a present that augurs to a future that we want to live in. What does that future look like? We have more rights in the PG frame. It's safer in the sovereign AI frame, which is arguably by far the most important, because all these other things are downstream from GDP growth and GDP health. And what if we transform America into the only democracy that actually grows, where production is more efficient and manufacturing actually happens? What is that frame? That frame is not you are going to buy into a future where you have no job, where adversaries win, and everybody who does win is a small, tiny group of people living in a tiny place that somehow believes because they eat vegetables and they don't support war fighters that they deserve to have the total means of production of this country. And the rest of us should just sit back and absorb the cost of that revolution, which we're paying for. How are we paying for it? In the enterprise context, people sign up for token self-pleasurings, and that at a real cost, like other forms of self-pleasuring, where you are paying for the right for them to migrate your IP, your know-how, your expertise to their model so that they can build a competitive business that doesn't require your business, your people. And why are they doing it? It's actually being done for what they believe are moral reasons. They are superior to you. They deserve to colonize your enterprise. You deserve to be colonized. And Palantir, and it's interesting, it doesn't work as well or as efficient purely on the alpha side as having an application layer, owning your compute. Witness, we built a partnership with NVIDIA. We're expanding our application layer. We are going to enter the market and already entering it in the classified space, as Sham alluded to, of fine-tuning models so that the models actually fine-tuned by us in our enterprise on an NVIDIA stack outperform frontier models. And you own the weights, you own the alpha, you own everything. Every single enterprise in this country is going to either look at doing this, find ways of doing it, or at least avoid the alternative of unprotected interaction with frontier models. This is very dangerous. You were warned about this in high school, and now you're learning about it in your enterprise. And at Palantir, we are at the front line. We are in the front of driving this revolution. I am driving the business to grow at a rate equal or above to what we have in U.S. commercial for the next 18 months, which is a very high goal, but it is one we can actually get to because we are fully aligned with what's right and what's good and what actually works well in an enterprise. And for the first time, people believe us. And if you didn't believe us, you can believe 149% growth in the U.S., a rule of 40 that's 155, 93% aggregate growth, and 90% growth in U.S. comm with 62, 63% free cash flow margins. People thought we wouldn't be profitable. So this is one of the more exciting times to be at Palantir. It's one of the more exciting times to participate in Palantir. And for everyone on the sidelines, you got to get off the sidelines. This is a revolution that will affect the sovereign revolution. Where you stand in it will affect your livelihood, the livelihood of the people you care, and whether America and the West win. We cannot regress to a thin philosophical model where only a small group of people who think very differently than most of us actually absorb all of the revenue and value in our business and transfer all the dangers to us. And that's what this revolution is about. And it's extremely motivating for those of us at Palantir. Thank you.
Thanks, Alex. Our first question is from Dan with Yorkville Ives. Dan, please turn on your camera and then you'll receive a prompt to unmute your line.
Where's the prompt? Well, while we're waiting, you can be entertained.
Maybe we can circle back to Dan. Our next question is from Mariana with Bank of America. Mariana, please turn on your camera and then you'll receive a prompt to unmute your line.
I think I'm good. Thank you. Can you walk through this at the Sovereignty Bootcamp? What did you learn with talking to customers that maybe you weren't expecting? I mean, obviously, just an overwhelming sort of group of executives. Can you talk about that, Alex?
Well, first of all, for those of you not in the know, we did a Sovereign boot camp after this kind of revolution exploded. And just to give the backdrop here, 2 years ago, we spent 4 or 5 months, Sasha, who runs this, organizing AIPCon. This was much more like, hey, let's invite our buddies over to lunch. And then all of a sudden, we start getting bombarded by people we invited, people we didn't invite, all levels of the business. So like when you're working in enterprise, it's really important that the operational people are interested. So it was like CEOs, operational leads. And there's a huge educational component, and Shyam talks about this a lot. Like people understand that they need a way of controlling their alpha. They understand broadly that token maxing is at their own cost, and they certainly understand that token maxing is leading to them transferring their data, their prompts, the way they run their business, their expertise to a third party. But they need education on what they can do about that with us, preferably, but also without us. How do you do contracts? How do you work with open weight models? How do you work with closed weight models? How does this work in ontology? Is ontology the protective layer that they've been told? Does it create value the way how would this look in their own business? And how would they work with the compute stack? And so there's just this massive demand, and we're in the business of educating people, both our customers and others. But it was a super heterodox group of people, both in terms of the kind of people showed up, the demand for it, and also people we've not worked for. By the way, one of the reasons the NDR number is so strong, ridiculously strong. I mean, people always write these things about customer adoption and maybe, but the NDR number is anomalously strong. That is also going to shift and even as hard as it is to believe, become even more positive, because some of our older partners we haven't really interacted with, they also showed up. They're like, oh, okay, now we get why we would need you. And not just Foundry. They're migrating across our stack. So customers that were only using Foundry now want ontology, now want to be part of the Sovereign AI stack. I would say, last not least, you're asking the external version, internally. Recruiting, retention, excitement at Palantir. I'm very excited. I think the people around this table are very excited. The legal department is excited. That hasn't happened. That doesn't happen. Like, they're out like, rock on. So it's more fun, So yeah, there's just that's the way this went down. And I think this is the way beginning. So the way at least we think about this internally is, what portion of the market is available to people who want to create value? Create value and keep it. That portion of the market has gone from a small portion of the market where we're doing well to like a large part of the US GDP. And that's why we need partners. Behind the scenes now, we're trying to find partners. Now, partners, we need technically exceedingly competent partners. Partners doesn't mean a vassal. We don't have to agree on every issue. We don't even have to agree on every client. They can occasionally compete against us. We've seen this in the defense tech stuff. Stack and Shyam, like the approach to defense tech where we partner with people. Partner doesn't mean we agree. Sometimes we compete, but it means we're marching in a similar direction. It allows us to scale. So those things are going to be a very big, important part of like essentially the guide. Why am I pushing the company to grow, not to just the end of the year, but next year? It's because that also forces us to find ways to scale to meet the demand that's out there.
Thanks, Alex. Our next question is from Mariana with Bank of America. Mariana, please turn on your camera and then you'll receive a prompt to unmute your line.
Good afternoon, everyone.
Hello.
So a follow-up to Dan's question. When all this AI revolution started, right, it was really clear for enterprises that data and proprietary data and how you train your models was going to be the key. But then we're like 3 years into that revolution, and now everyone started to realize, oh, owning my data and wherever I learn from my data is important. What happened there? Why you think that you position yourself back then in a different approach to AI that enterprises weren't able to see? And why these numbers that reflect that you're the winner of AI today, it wasn't that clear for any other software application back then?
Well, you can kind of divide it up into two parts. There's the first part is efficacy, and then the second part is efficiency. That's not quite the right word, but it's like, how do you scale it? In the 0 to 1 phase, it's much more important to focus on the application layer. Like, okay, this new thing has happened. How do we turn that into economic value? And then as people started to experience the economic value, and as time started happening, you started to see that some of the people who were partners out there were building things that were competitive to you. And I think that took some time to kind of seep into the psyche and mindset of, wait a second, this is maybe not, now I know this thing is valuable in the right hands on the right platform, but I also am going to need to control the weights, that the alpha that is being generated isn't simply the data that's resident in my enterprise. It's also the metadata, the reasoning traces, the exhaust, the usage of this, which I don't yet have mechanisms to control. And now I understand that's actually probably more valuable than just the data in my enterprise. And that's been a clarion call, I think, for the market over the last quarter, 2 quarters.
There's also the question implicit in your question is, why did we get this right? And, again, I think we are actually fully aligned with our partners. Sometimes we make decisions like, that are against our economic interests. Like, we're supporting lots of institutions in Europe. The growth sucks. I mean, clandestine institutions. But without our products, they would have rampant terrorism and their migration problems, and the results would be 10 times worse. It's not actually in our economic interest anymore to do this, but we still do it. And it's because we actually are believers, for better or worse. I would say also, this is a company that from inception, has valued artistic insights, meaning you can't model something purely on science. You have to have an aesthetic or artistic appreciation for it. And we've made huge bets. Everyone sitting at this table and many, many hundreds of people at Palantir have essentially artistic insights. We've always said we're a colony of artists, and people assume that means we're just difficult. And that's also true. But, it's also, we value insights that are way before anyone else would see them. And we build major parts of our business. That's very hard for normal business to do because, one of the jokes running around Palantir is we can definitely meet our guide next year if we get paid for all the people copying us. So we got a small portion of people copy, of the funds for the copiers, we do very well. Normal businesses, again, no critique here, are built around, there was a playbook, we execute on that playbook, and we're in a non-playbook world. So executing on a playbook that worked 5-10 years ago, essentially build parasitic software and monetize it, that doesn't work now. And there's hundreds of variants of that, but that is a central advantage we have. We are a colony of believers and artists that are very motivated to drive value. And that sets us aside much more than I would have imagined 10 years ago if you'd asked the same question. And then luckily for us, this is capitalism. DSA wants to get rid of it, but until they do, you got to look at the results, because if our results, and the other thing I'll tell you that's very special for us, we are outsiders. Outsiders, like you're an outsider. You come to this country, you better have really good results. And like the same thing for Palantir. We know we need the best results because people aren't buying our product because we're swinging the golf club correctly or paying for the steak dinner. They don't even invite us to steak dinners. So that outsider status causes huge problems, but in the first 18 years, but a lot of benefits in the next 18 years. And other people don't like being outsiders. In fact, I'm struggling with our current popularity.
Thank you. Our next question is from Gil with DA Davidson. Gil, please turn on your camera and then you'll receive a prompt to unmute your line.
Thank you. On the topic of sovereignty, you focused a lot on how dangerous it is to give the keys to the labs because they could choose to compete with you. Is there another aspect of this as well, though, that if you choose a lab and you buy the orchestration and the consulting and the harnesses from them, you're beholden to their models? And if something happens, if it's not the best model anymore, if the model gets pulled, then you as a customer are stuck and you may have a mission critical system fail. And this isn't hypothetical. This happened a couple of times this year where one of the frontier models got pulled by either the government or the company. Well, if you work with Palantir, I would assume that when that happens, you can go to your customer and say, hey, if that model doesn't work, I can plug in another model for you.
No, I mean, I'll let Ryan and Sham comment here, but we're already doing that across the US government. We have a product that allows you to switch out models. Look, at the end of the day, if you are locked into a product, you're going to, I mean, that's the nature of monopoly capitalism. That's why people want the lock-in, because then they can raise the prices and reduce the quality. We're against that because we're on the side of the American worker, the American people, and its great institutions and other institutions across the West. But yes, and people who are running big enterprises in this country are very sophisticated. They're aware of these risks, and they don't like people who are kind of flaunting, like setting this up so that they feel they're being made fun of or they're a sucker, basically. So there's a lot of anger here. I spend, interestingly, a fair bit of my time trying to explain to people that, some of the people involved in these things are not the caricatures they think they are, but because the business setup looks like heads I win, tails I win. And American business people don't like that. But then, I don't know, there's a lot of things on the contractual front that would support that.
Yeah, I would say that's, our whole focus is converting tokens to value. The example Sham gave, that's happening across the board in the conversations with customers. That's why they're looking to expand, to convert how they position themselves in the industry with us, in their industry. And so we're seeing extreme alignment. It's not about being beholden to one model. It's about bringing the right models to bear for the right purposes. And our contracts, our structures are set up to do that, to support and compound their alpha in the organization.
I think, I mentioned it earlier, but you're going to see this, we've been beholden to a small number of benchmarks that people have been designing models to, and then releasing models saying, look how well it does on this benchmark. But the benchmark has actually almost nothing to do with your business. So how do you figure out how to make the benchmark that represents your reality, what you're trying to succeed at, what you're trying to get better at, and then see what model makes sense? And the natural consequence of doing that, even leaving aside all of your, how do I climb that hill? How do I figure out what it is that I do as a business that I feed back into weights that I can control, which presupposes an open model and sovereignty. And then you're not just going to do that where you're waiting, hey, maybe I'll switch it out when this model gets pulled, when the rug gets pulled out from underneath me. You're actually going to be leveraging the automation to do that constantly, to figure out when you have a next checkpoint that you can forward. Maybe there's a new model. I mentioned the example. I literally almost felt gaslit when within 24 hours of getting Nemotron up with no post-training, this is vanilla Nemotron Ultra, it did better than Frontier. If you just looked at the numbers, you would say, well, it's nowhere near the Frontier. That shouldn't even be possible. But of course, the benchmarks are wrong. I mean, the benchmarks are right for what the benchmark's measuring, but that's not my business. Those are not the tasks my customers had that they were trying to solve. And so then moving this to an empirical basis is how we're going to accelerate the realization of tokens to real economic value.
Thank you. Alex, as always, we have a lot of individual investors on the line. Is there anything you'd like to say before we end the call?
Well, your support was crucial to getting us this far, and crucial to getting us to where we're going to go, which is a much, 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 much larger company. This is one of the most exciting times to be involved in the Palantir mission. We are going to help transform, especially this country, but allied countries, both in commercial and government. And this sovereign frame that we're using as our organizational principle is one that is inclusive of everybody who wants to have a better world today and tomorrow. And we invite everyone to engage with it in some form. And thank you.
Thank you. That concludes Q&A for today's call.
So every time every time I watch, so I've watched the last like 4, 5, or 6 Palantir earnings calls. And every time I leave a Palantir earnings call, I go, and I always end up like conflicted of how I feel about it, right? Because on one end, what they're doing really works. And it obviously works, right? And it's super impactful. Look at their customers. Look at their customers and look at their renewal rate. That's all you need to know. Look at how long the people who work with them stick around. It obviously works. I think, in my opinion, if you're a business owner, your benchmark is renewals. People who come once and then they want to go again. That is the whole thing, right? But then on the other hand, it just, when I hear Alex go, like he does kind of throw off some tangents and fidget around a good bit to where it's kind of hard to like concentrate on exactly what it is that he's saying. And so I always feel like this funny little feeling after I listen to an earnings call where I have to sit there and just kind of think really heavily about what just happened, like what he just said, and if I agree. And then I usually end up being like, yeah, I agree with all that. And then I just move on. But it's like, I don't know. But that's the thing, right? Like, I feel a lot of people give Palantir a lot of flack, and they talk a lot of crap about Palantir because Alex is a very unique individual, to say the least. But at the end of the day, it's like, think about how many of these major founders and these founders in the company, a lot of them are weird. I'm sorry, Alex is a little bit weird in his own way. It doesn't mean it's a good thing, doesn't mean it's a bad thing, but Elon Musk is as close to a lizard person as you can get. So is Mark Zuckerberg. Like, Mark Zuckerberg used to try to be a human being, right? But so many of these founders they're just it's what they are. You know what I mean? Or even CEOs, like it's just what they are. Like, their job is to do their job right, to do a good job at it, get more customers in the door, get your renewal rates up, increase your profit, increase your margins, improve your margins. That's what their job is, right? So you can't put down a whole business just because you think their founder's weird. You know what I mean? So that's kind of my thought process on it. I was very curious to see what you guys thought. That's why I ran the poll. So I had about 53% said not a fan, 48% or 47% said a fan. I get it. I do get it. Whenever people say, I just don't like Alex Karp, I go, I mean, I understand that. You know what I mean? Like, personalities clash, and he is a little brash kind of with his own personality and all. But, the one thing that I do kind of, whenever it comes to the things that I one of the things I dislike about Palantir and just about companies in general, I hate when people leave earnings calls or press conferences or interviews talking more about the personality of the CEO or a person at the company and less about the actual business. Because I feel like it dilutes, what's the word I'm looking for? Like, almost like muddies the water a little bit. Maybe that's what I'm trying to say. It like muddies the water a little bit to where you're not actually looking at the business, which is what matters. You're more looking at the person. But I get there's positives to it as well. I mean, you look at SpaceX, right? Like, SpaceX grew as much as it did because it was Elon Musk. Just simple as that, cut and dry. Elon Musk, So it's an interesting thing. It's an interesting thing, to say the least. I do not like him. I don't like him, but I don't not like him, but he talks so much you lose the narrative of what he's saying. I could see that. How can you... Oh, this is interesting. How can you call yourself a human if you invest in Palantir? These MFers kill innocent people. Even if I can make millions from Palantir, I will never invest in that dystopian shit. Okay. He is interesting, to say the least. So Palantir had earnings surprise. Yeah, I'm gonna do a quick overview in a second here before we jump off. Most geniuses are weird. Yeah. I appreciate that. Appreciate that. I didn't even think I jumped into any of it, but no, I appreciate that a ton. Shout out to you, homie. Bet your money on someone special. Okay, all right, let's do a quick little recap, and then we are going to go ahead and shut her down here, folks. Been going live for about 2 hours now. been going live for about 2 hours now. I do appreciate a little bit of a shorter one on their end. They did it for about 45 minutes. Those hour and a half ones start to get a little bit much. They start to drag a bit. So, okay, let's talk about what happened today. The headline, the marquee event, Palantir released their earnings, absolutely smashed it across the board. They beat on revenue. They beat on net income. They raised forward guidance. Their commercial business grew substantially more than analysts were expecting. It grew more than I was expecting and even hoping for. It really was a fantastic earnings report. And what it goes to show is that these software companies still do have demand, and there are still people out there who need the services that are running on this hardware. The whole game of AI is hardware and software. That's what it really realistically is, right? Hardware, software, hardware, software. Hardware relies on software, software relies on hardware. And these companies who are producing the software, right, the consumer side of the hardware companies, they're still doing a great job. And Palantir is a great representation of the fact that these software companies are still, some of them, right, are continuing to escalate and accelerate and move forward and generate more revenue. And that is good. It's good for the entire stack. It's good for everything. I said it earlier. I said it earlier in the live stream. Sorry, I'm losing my voice a bit here. But all in all, think about it. If software companies started doing poorly, they're going to spend less money on computational power, which means that these hyperscalers are going to lose customers and they're not going to generate as much revenue and probably not need as much computational space, right? So they're going to create less data centers, spend less money on GPUs, CPUs, memory, et cetera, which means that the semiconductor companies are going to generate less revenue. And if they generate less revenue and they need less chips, the chip manufacturers are going to produce less, which means they make less money, which means that companies like ASML are going to need or are not going to have a reason to produce as many machines, and they're going to make less money. From start to finish, if software dies, all the rest dies behind it. And so you always want to be in tune with these AI companies and keeping an eye on what's happening with them in the software, niche of the AI trade, because it'll give you a clear image of the inputs that are going into these that is going into the AI trade. And I think it's great. And I'm very happy to see it. It's cool to see Palantir's price actually maintaining right now. As you can see, bottom to top, Palantir ran over 14%. I told you all that a 12% price move, 12% move was priced in. And yeah, currently we are actually sitting at roughly a right under 12% move. Even whenever we saw Palantir's price right around here, I told you guys that I thought it could have a little bit more of upward trajectory to go, but it would get harder and harder the higher it got. But I thought it was going to knock out that 12% move, and that's exactly what it did. So anybody who made some quick little moves on that, congratulations to you. Nonetheless, I am not a Palantir holder, but I am someone who pays very close attention to it. I owned Palantir for a short period of time back in 2024. And then I kind of started rotating and making different changes and moves. So all in all, that is the game with that's the whole game with Palantir, and it's very good for the AI space. And I think this is a net positive for AI as in general. I think this is great for the AI trade in general. And if you're a Micron investor, an AMD investor, ServiceNow investor, Oracle, it doesn't matter. I think this is beneficial to you. Now, going into tomorrow, we are going to discuss AMD. That's going to be a big one. You guys know I'm going to be here for that. AMD has its earnings report tomorrow. That is going to be one of, if not, no, it's not the most, but definitely one of the most important earnings reports that'll happen in the month of August. Obviously, the second largest semiconductor company in terms of GPUs and CPUs, right behind NVIDIA, capturing a bunch of market share. But it's the one everyone cares about. So that's going to be the big boom moment tomorrow. Okay, that's going to be the big boom moment. It's going to be big. It's going to be wild. It's going to be chaos, all the titles and thumbnails I use. It's going to be all of those things. And it's going to be a big one. So I'm, of course, going to be here covering it. I did want to apologize now that the stream is coming towards an end. I did want to apologize to you all. Maybe my energy felt a little bit down today. I am sick, unfortunately. But I didn't want to, there's no point in even getting into that. I'm just going to be here giving you the guys the content one way or another. But if you notice, maybe I was a little bit quieter today. I'm a little bit sick. Okay. But it's all good. We're going to keep the ball rolling. So that's that. I have a couple things for you before you do check off. That is going to be it for the day. Let's see where we start. So if you are someone who is interested in getting more content from me, I will let you know there's a link down below to TH Capital. TH Capital is where you will find all of my courses. TH Capital is where you will find all of my live events. TH Capital is where you will find the Discord server as well, as you can see here. This is where you will find the Discord server, which is where I post all of the things that I'm buying, all of the things that I'm selling. I actually made an exclusive video for them earlier today. You can see, of course, my trade information here. This is where you can find my portfolio and the moves that I'm making in my portfolio. That's all available in TH Cap. You also have the link down below to the toolkit. The toolkit is that thing that you see me using whenever I pull up the chart. This bad boy right here. You ever seen this? This is the toolkit. It is what I personally use to do all of my technical analysis for me. It is, in my opinion, one of the best toolkits out there for anyone of any experience level, but especially those of you who are new to technical analysis. So check out the link down below to that. I also did make a full video about it here on the YouTube channel on Saturday, an educational video right here. Feel free to go check that bad boy out. It was stock investors. You need to see this indicator before Monday. Go check that out. Last but not least, if you are someone who is trading stocks, whether you're trading on leverage or trading in normal, there's a link down below to Liquid. Liquid is a place where you can buy, sell, long, and short stocks. This is the platform where you've seen me open up many trades before, such as SanDisk, Micron, and many more. I've done some pretty decent trades here, especially that little 42% gainer from a few days ago. So that's the platform that I use. I have an affiliate link with them. So if you use my link, they're going to give you a 10% discount on all of your fees, which is pretty cool. So you're going to save a bit of money there in terms of fees. So all in all, they got a couple things there for you to go ahead and check out. Check out Liquid, check out the toolkit, check out the courses. Hey, I did want to let you guys know, if you are in TH Capital, speaking of TH Capital members specifically, I am going to be starting what's called group training pretty soon here towards the middle to end of this month, where basically there's going to be like groups of 4 or 5, and maybe once or twice a week I'll do this, groups of 3 to 5 people, and we're going to do very segmented training sessions. So next week, for example, I might do something like the golden zone, right? We're going to talk about the golden zone, and there's going to be a 2-hour call dedicated specifically to the golden zone itself. And the 5 people who sign up, it's like a first come, first serve sort of thing. The 5 people who sign up, we're going to do like an hour of me talking about it. Then the last hour to hour and a half, you guys will get a chance to ask questions, and I'll walk you all through it. So that's coming very soon. I actually plan on doing the very first one next week. So stay tuned for that. That's going to be very fun. And I think that'll be great for us all to start kind of learning and growing together. We'll probably host them on weekends when everyone's schedule aligns. So just stay tuned for the details there. But all in all, I really appreciate you guys tuning in today. Again, sorry, I'm a little bit sickly today, so energy's a little bit lower, but hopefully you guys still did find all of the content today valuable. I did a live stream this morning. I did another video afterwards. I did this live stream today. I think we've been on live for about 4 or 5 hours a day. So still pushing through it anyway, and I'm going to keep it pushing anyway, baby. So I appreciate you all tuning in. I hope you guys did enjoy today's stream, and I can't wait to see you all in the next one. Bye, everybody.